here lately. I was going to the store yesterday, and she said, "Hey, CJ, can you get me 6 Sprite? Bring home 6 bottles of Sprite." I went to the Kroger, because you guys know I go to the Kroger. Got all the way back home, and I realized I picked 7-Up. Somebody has to do it when he's not here, right? Come on, you get that, right?
Oh my God. I've never heard that one.
All of these fundamentals do matter in these market. Peloton at liquidation, the company goes out of business, is worth $5.80. So I'm looking to sell puts under $5 because that is the nature of this market, and I love it, and I'm in a good mood. All right, let's go.
Garrett, how many times did we say picking up pennies in front of a steamroller, in front of a freight train last week? Maybe 15 times?
I said it once, and then people asked me to repeat it 14 times.
Yeah. So how about this, Penny? How about this for bad trades? A customer sold 40,000 of the June 3rd 17.5 puts at 13 cents yesterday. 13 cents yesterday in Snap for a week.
Huh.
Well, welcome to a nightmare. My God.
Yeah. And there's more. The June 24th 16 puts. They collected 31 cents. Nice sale, bro. Way to go.
Wow. Well, you know what? All I'm looking for is my $1.50. So good luck, my friends. That guy's going to be in a world of hurt.
Big money is not always
nice
smart money,
sale,
folks.
bro. All right. We are.
This is interesting. You got to wonder whether they're going to force Musk to buy the company, because the way this trader set things up, that's how he or she gets paid. They sold the September 36 put, collecting $1.64. Then they bought the January 2023 47 call, selling the 55 call. Well, remember that price, about $54.20. So they basically are financing that 47 call with a near dated put, and then selling an out of the money call that they don't believe can that would be worthless if and when a deal gets closed. And pretty significant bet on Musk losing it in court. And it's not the only piece of Twitter bullish paper we've been seeing. They've been buying August. We saw some September calls, lots and lots of volume in Twitter, almost all exclusively bullish. So a lot of paper and money betting on a forced purchase here.
Look at that, Mark. I mean, I was just looking at the volume profile. There is a bullish setup that Twitter does usually follow through with. When I see it in this volume profile that I showed you before, and you're seeing some bullish money flow too.
Yeah. So you have to wonder what's going on here. I don't think it has to do with the earnings. I think everything revolves around this court case. And, there's a lot of lawyers out there that think Musk is going to have to bite the bullet. Maybe it won't be at that $54 price. Maybe they agree on something a little lower. But all this bull paper we're seeing makes me think, maybe they're going to force him to do a deal.
Money Morning Live, your #1 source for market education and real live trading, weekdays from 8:30 a.m. until the closing bell. Only on MoneyMorningLive.com.
Hey, so again, maybe you guys don't know who I am. I'm a day trader, always trading, just looking for ideas each and every day. Yesterday was pretty extraordinary. Another one of those days where we're just buying those worthless stocks because they've already gotten beaten down. So if you guys are following, a lot of the activity in Peloton, and we had the plug, a lot of the activity was pre-market, but regular session was pretty sweet, my friends. So listen, here's the pre-market move that we were getting involved in right around 8 o'clock when it got over the VWAP. So basically the story is, when you see these stocks that have been just absolutely decimated, the shorts are going to cover sooner or later to take their profit. The VWAP tells you when the shorts are going to cover. So what all these stocks, just like Coinbase, Peloton yesterday, Plug Power, all these stocks have been hammered. Look how beautiful this trade was this in the morning. This is Plug Power. Again, just a consolidation. Here's the little break. But then fast forward to what happens in the regular session, and this is what's unique about what we do. We're on both sides of every trade almost every day lately, because this market is a pump and dump. Meaning if it gets up, it gets dumped. It gets pumped, and then it gets dumped. The VWAP tells you when the dump is about to happen.
Love it. All right, Kenny. Trading with Kenny is not just profitable, it's blast. It is a blast. I love that VWAP.
Well, I'm going to completely take over for a minute then, Kenny, because I want to show people another way that they can get in here, because I know some of you are shy. I know some of you guys don't want to call Gabe. You don't want to get on the phone. I'm the same way. I hate phone calls. I'm a text message and a direct message kind of guy. Well, if you take a look at the chat right here, we have our chat going on. I see 8Baller. I see Michael in Dallas, Eric B, Passport Elite for Life, all hanging out in the chat. But there's another side of the chat that some of you may not know. And this is the direct message. You like this, Kenny? If you come on over here, notice up top where my cursor is kind of hanging out, we have this direct message option. I have a message sitting there actually right now. And right here, you can message anyone that you want from the chat. Or you can reach out to someone from our service team, like Gabe or Apollo is probably the best person that you want to reach out to. You just kind of find him hanging out in the chat. There he is right here. See, Gabe. I could just click on his name and I could send him a quick message. Hi, Gabe. You see how that works? It's incredible how you can communicate with people these days. So if you have questions about Kenny's service or any others, or if you want to join up but you don't want to call the number, that's another way of doing it. I know you're all mind blown. I sometimes do that to myself as well, but I'm gonna put Kenny back on. But just so you guys know, I'll tell you guys another day as well. But
Hey, welcome to Pump Up the Close. As you can tell, I am the Wall Street hype woman. I love pumping things up, especially the close, which is in my VIP room. Trade the close. We have experts come on every day to battle for the best stock to pick going into the close. Now, guys, we're going to get into some headlines. We're also going to get into a watch list. I will take requests, okay? It's like the Oprah's trade show, just giving out trade ideas and taking your requests. Also, guys, we're going to be looking at some big movers and some big headlines today. I know I already said headlines, but there's a lot of headlines to go over today. VIP room, I just sent out an alert in the chat, so please make sure that you get that. It is involving trading right now into the close. So, okay, that's in the main room, the VIP room. It's big, so please go there right now to see that alert. Point of control on the volume profile shows what price, okay, what exact price had the most volume. All right, so it's not an average, it is it. So 259 in GVO at that price on any day, it doesn't matter, it could be a group of days. 259 is a key area that had the most volume at that price of buying and selling. And that's why I don't care about the bar colors on my chart. All I care about is that node. And if we get above that node, you want to buy it. If we get below that node, you want to short it.
Welcome. We do this every day, 12:30 Monday Morning Live. This is Midday Momentum. We talk about momentum. We talk about ways to trade this market actively. We got to get right into this because we are welcoming Jim Rickards. He's the author of the bestseller, Currency Wars, The Making of the Next Global Crisis. Very well. So happy to see you again. Thanks so much for taking the time. We want to dive right into this.
So we clearly don't have an overheating economy in the real sense. But what we do have is inflation. So when the Fed attacks inflation with rate increases, the question is, what are they doing? Well, I mentioned earlier the inflation is coming from the supply side, energy, food, transportation, etc., not the demand side. Well, the problem is the Fed doesn't drill for oil. The Fed doesn't drive trucks. The Fed doesn't plant crops. They can't actually do anything about the supply side. But what they can do is destroy demand, raise rates so much, so fast that people can't afford mortgages, they can't afford houses, etc. And if that's the case, you'll get the inflation under control, but you'll cause a recession. So again, the linkage between Fed rate hikes and recession or worse is not a coincidence. It's almost baked in the pie.
Hi there, my name is Amin. I am a broadcaster. I push buttons behind the scenes, like these guys. I'm here to tell you about Morning Live. I'm here to tell you about Discord because yes, Money Morning Live now has a Discord server. Discord is a free text and video voice chat app that you can use on both your phone and your computer. And the goal is basically to still allow all the community to keep chatting about trades or literally anything that's still legal during off hours after all the streams are over. So you want to talk about crypto, you want to talk about options, stocks, any other topic, there is a channel for that. And if you're part of the Warlocks World, Penny Nation, Night Trader, World Big Trade, Profit Revolution, there's gonna be special categories for those, but only if you're a member. Now the way to join the server is also very easy. All you have to do is you go to discord.com, you make an account if you don't have one already. Once that's done, you come back to moneymoneylive.com, you go to your user settings, kind of like where you change your username, but you're gonna see that on the right side there is a little Discord corner. You click there to connect your account. Once that's done, you can click on join the Discord server. Once you're in, you complete the verification process with your phone number to make sure that everything is safe. And you accept the rules, and there you're in. You can see all the channels. And if you struggle or if you run into any issue, we're gonna send you all a little document that you can read. And at the end of it, there's gonna be even some videos that can help you in case you are stuck anywhere. So yeah, just join us and let's see what happens.
We're going to talk about crypto, hedge funds. We're going to talk about MasterCard and Binance. Binance has a card, if you guys seen it floating around, that like now, I know Shiba Inu and all this, but they also have other assets that are on there. That's kind of cool, I guess, especially in countries and places where money's not as easy to access. We'll talk about that. We'll talk about Coinbase stock doing pretty good, even though everybody's like Kathy Lee's and all the other Johnny-come-latelys like, it's over. Coinbase is just dead. This was at like 57. I'm out. I'm Kathy and I'm out. Cool. Well, it's at 108, dummy, because they just partnered with BlackRock, dummy. We'll talk about, we'll do a quick market review because that's kind of fun.
Digital heavyweights, you hang out in there multiple times per week and you go over things that you don't go over here in the main room. You go more in depth and you have membership available for that. Again, along with that comes the Discord with that private room. But it's a room that's always open for the community to chat. So when they notice something's going on,
Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic Taco Tuesday. Everybody got plans to eat some soft tacos tonight? Hope so. Let's get to it with the one, the only, you know her, you love her, Olivia Vaz, starting in 5, 4, 3, 2.
Hey everyone, I'm Olivia Vaz and welcome to Casa de Vaz. It is Taco Tuesday and where did all our trading tacos go? I don't know. Anyway, we're going to make some money today, people. And soft tacos? I don't think so, Ryan. It's a crunchy taco type of Tuesday. Throw some taco signs and money signs in the chat if you are ready for the best live trading show on the internet, starting right now. We're kicking things off like we always do with some earnings, baby. First, we got to talk about how Walmart, they are a big company that reported numbers this morning that dropped a nugget last night that they're teaming up with Paramount Plus for a sweet joint streaming deal. Kenny, good morning. What are you seeing so far with Walmart? Is the day over yet and you're heading to the local cantina for some salsa?
Good morning, everybody. Walmart. Remember this one? They pre-announced about a month and a half ago, but that was right at the time of the Josh Brown bottom. And I said, hey, let's just buy Walmart here at 119 if everybody's saying they're going out of business. And you had a great move. So now whatever they said in the pre-announcement apparently wasn't that important because the stock is now above where all that bad news came from. Bottom line is normally I'm looking to short these type of stocks, but considering the market doesn't want to go down anymore, I'm going to remain cautious. I'm going to show you a Home Depot in a second, but right now, nothing wants to go down, and it's very difficult to be shorting stocks right now.
In honor of the hammer, Kenny's going to be looking at some Home Depot to trade. Hopefully that's going to be more of a stock trade instead of a background noise, Kenny, if you know what I'm talking about. Garrett, we have Walmart as a power earnings gap this morning. Are you seeing anything surprising from the revenue numbers this morning?
No, this was actually pretty boring. Sales grew 8%. Profits were tight, obviously. I mean, that's an inflation gauge. But overall, this is just kind of quiet, odd, retail numbers. So nothing really nothing to see here. And again, when they say, we don't understand why this market just keeps rallying. Momentum. And it went positive on July 19th. And we don't care. We're just going to keep buying the SPY. 430 is the next level. We're just in this consolidation mode probably for the next few days. We'll see what the minutes say tomorrow. That we get the all clear from the minutes tomorrow, the next move up is 447. There's a massive gap between here and there. And then at that point, everybody missed the rally because they weren't paying attention.
Grant and Winnie in the chat saying, good morning, guys. Get your compasses out right now because we are pointing east towards some earnings. And Compass is reporting today. Also, 10-cent music, Zip Recruiter, Home Depot, the Hammer, Lumentum, On, C Limited, and of course, Walmart. Kenny, tell us about Home Depot. I know you're dying to.
Yeah. Should I keep it a secret? Because I just did a session with the Lifetime members. I should just let the big room into it after we get involved. But yeah, you're staring at a reason to want to buy Home Depot, also because we're in a bull market. Chances are the stock's going to be at 318 today, right? Because it was at 318 this morning, and then it plummeted. But now it's hovering between the 1 minute and the multi-day is what you do right now. Rub your hands together and wait. And when that stock breaks out, I'm looking for 313.65. You get over 314 and a quarter, chances are you're going to 318. And that's my plan. The only thing is there are no good options to trade. So I'll be trading the stock, not the options. Not the options. Not the options.
Not the options, just keeping it with the stock. Now getting to something a little different. Late last night, when all of our trading tacos disappeared, Garrett was apparently looking into some investment filings yesterday and what they were disclosing. Garrett, was there anything that took you by surprise yesterday?
Well, this is the 13 Fs. We're looking at what hedge funds are doing. And I mean, you got to talk about Michael Burry. So if you remember Michael Burry, he was the Big Short. That's who Christian Bale's character was. And he sold every single one of his stocks in the second quarter, including Apple and Meta and virtually everything else, moving heavily to cash, except keeping one stock, Geo Group, which is a private prison company. He is very bearish. I've written about him multiple times in World's Biggest Trade over the last week. But the key thing here, Vaz, he believes that there's an earnings issue. He believes that there's too much valuation problems. He thinks we're in the middle of this short-term bear rally, and that ultimately the market's going to roll over. He wrote heavily about the dot-com bubble, where you had a 25% rally in the middle of that of the dot-com crash, and then the Nasdaq and the S&P 500 fell 45%. Now that all makes sense big on the surface, but keep something in mind. For the 2008 crisis, which he predicted, he was 2 years early. And a lot of investors wanted to start pulling their cash because the market kept going up. And he was explaining, look, this is going to blow up. This is going to blow up. It took a lot of time. And Burry is a longer-term investor, longer-term speculator in this environment of the ups and downs. We are actively trading this stuff. Momentum is telling us right now, stay in, don't leave. And when it goes negative, and we have called the negative moves 4 times this year, then we'll get out. But for right now, we're going to continue to trade some of these ridiculous names higher because nobody wants to sell right now.
I was going to say, Garrett, you just took it right off my mind. Michael Burry is known for calling things too early. So is it too late or just in time to get in on some of these filings, some of these stocks?
Well, I think honestly, which sounds a little crazy, I think that some of the more those upper level parts of the S&P 500, the Apples, the Metas, they've actually kind of been some oversold conditions. And if you look at some of that, you look at the MFI, you look at the RSI, they still have a little bit of a ways to go. So we were looking yesterday at the world's biggest trade at the S&P 500 top 50 names, because last year, even though the market was selling off, the S&P 500 was going higher. The bottom 450 stocks were the ones that were struggling for the S&P 500, and those top tier names, they were lifting the market up. And it feels like that's going to be the last leg of this rally, where you're going to see possibly Google get to 130. You're going to see Amazon continue to run. And then at that point, when it gets a little too overstretched and we have one negative bit of news, whether it is the catalyst tomorrow around the Fed minutes, maybe it's the September 2nd number, maybe it's the Fed meeting next month, or maybe it doesn't come until January, but it will come. You just have to be patient. Yes, you can still stay in this market. Understand we are heavily approaching overbought conditions, but set stops. Buy the insurance now while it's still cheap with the VIX at 20. And then moving forward, we're just going to look the second that we start to see a breakdown 3 to 4 straight days in the S&P 500 and a lot more selling at Amplify. We get out of the way, and then we ride this thing to the other side using the S&P 500 Short Pro ETF, which is SH. Not shorting yet. I will let you know when.
All right. Well, it looks like Surf Dancing Hogan was with Michael Burry owning Geo a couple years back. We're going to get to the big number, everyone, because this is right on the tails of what Garrett is talking about, along with momentum, and it is 162 million. That is how much volume went into meme stock Bed Bath & Beyond yesterday, as shares ended the day up around 23%. This is a little over 10 times the average volume for the merchandise retailer. Kenny, you were telling us to trade BBBY early yesterday in the pre-market. Were you able to stick it with some of the VWAP trades throughout the day?
Oh, my God. How are you? Hey, welcome back. Sure. Yeah, I mean, because this is by far the greatest trading market I have ever seen in my career. And that's 30 years, my friends. So yeah, Bed Bath & Beyond. Look, if you got chopped up in it during the middle of the day, look at what happened later in the day. So remember, the more confusion and frustration a stock puts people through when it finally breaks out of that range, otherwise known as the confusion range. And look, you hit it up here once, it fell apart, you tried to get something going, you tried to get something going again. But finally here at the end of the day, you're above the VWAP, and then you finally started consolidating at a higher level, then you broke. Thank you. That's why we're buying 1475, and you were looking at the 1431 as you're out. And you finally got out of that range, and look at what it did. That's 3 points on a $14 stock. Thank you. And that was an incredible move, and we were involved. And listen, Bed Bath & Beyond, for you option players, very liquid options. I heard really great stories about what you were doing with the $15 calls. And yeah, Bed Bath & Beyond, back in play, as long as there's volume. But look at what it's doing this morning, my friends. And again, if you love VWAP, let me hear it, because that is another indication of how the market is controlled by the algorithms. When a stock breaks the blue line, that's today's VWAP, and it goes right back to the prior day VWAP, and that's where it bounces, welcome to all the proof you need of what I've been saying for the last 11 years. The market is rigged, and it follows VWAP, and there's no denying it right there.
And that doesn't matter, because as long as we're making money on it, and Kenny, you know our viewers love a good options play, so they made some nice moolah with that. Garrett,
is there a pillow fight going to break out? What's going on over there? I'm going to hit you with a pillow.
What did you say?
Is there a pillow fight about to break out? What's going on?
I have a massive amount of pillows on this couch.
Wow.
I have no other furniture but a nice big comfy couch here. Garrett, you love a good .com, and you're just champing at the bit to short this thing. Is the stock a little too volatile for any momentum moves right now?
I mean, it had insider buying at $4. Now it's at 16. Again, this is why you got to follow these things. And this has just been one of those companies. Look, the numbers are horrible. The balance sheet is terrible. The price to EV to EBIT, it's negative. Like, this is a terrible company, but it doesn't matter. Kenny just spoke to it. It's following VWAP. Momentum is positive, so it's going to continue to. It looks like it's going to continue to run. And I want companies like this. Look, I had a basket of stocks that I shorted in the event that momentum went negative, and a lot of them were EV stocks. And I'm probably not going to take aim at them because the government just threw the GDP of Norway, actually a little bit more than the GDP of Norway, directly at the EV sector. So I need companies to short when all of this stuff goes negative. I obviously will return to ARK Invest, but Bed Bath & Beyond is right there. This is a company that could go bankrupt in the next 2 years if interest rates continue to rise and the Fed is mismanaging inflation. So yeah, I'm waiting for it, but I'm going to be patient. And then when it's time to do it, I'm looking down around $10 to short it. I'm going to wait. Might be a week, might be 2 months, but it's on my radar.
All right, well, I'm going to feature a cool little Bed Bath & Beyond chart coming up in just a little bit. But before that, we're going to get into some good old-fashioned trade talk with our beautiful viewers here. Hedge fund managers are slowly coming out of their summer vacation homes and causing some ruckus. A new Disney stake owner, Dan Loeb, made news yesterday. He sent a letter to the House of Mouse advising the company to split off its ESPN division. The push is to free up ESPN from Disney so they can get in on the sports betting game. Garrett, the countdown to our fantasy football draft is coming in. Would this spinoff be a smart move as more competitors to ESPN are looking to add sports betting to their services?
I think it would do really well for ESPN. I think immediately they would be the name in the space. They would supplant a lot of the existing names. Disney's CEO has actually spoken to this. They've talked about rolling Hulu up into the Disney Plus platform and then spinning off ESPN. But the reality is, Vaz, I have no idea what their numbers look like. I have no idea what their numbers look like. And moving forward, look, there's a lot of competition with ESPN. They actually have a lot of challenges moving forward, particularly around a lot of their deals that they've made with conferences like the SEC. Things are kind of mixing up. So if it spun off and it went public, yeah, I would trade it with the VWAP for the first week, but it's probably not something that I would buy and hold.
All right. Well, I don't know if you guys saw this, but CJ's probably fist pumping somewhere that Kroger applying for licenses to have kiosks for some sports betting so you can get your bananas and a little bit of sports betting too. Investors are looking into this idea. Shares shot up a little over 2% yesterday on Disney. The Disney chart looks great. Kenny, is the VWAP saying the same thing for some day trading action?
You know what? I haven't watched Disney in a while, but I'm a fan of the stock. Hey, look. This is just yesterday, my friends. If you guys are still wondering what faux show bros look like, look, remember the market, oh boy, the market wants to get you out, right? So it breaks the stocks down just slightly under prior levels. And it's really sneaky when they do that. But when you see that and you see the stock recover to the VWAP and then it breaks over the VWAP, just like, Revlon at the end of the day and whatever stock I was showing you, Bed Bath & Beyond, this is a great reason to buy. Remember, the more it's underneath the VWAP and frustrating people, and if you get the late day break, and again, it's not a late day, but it's a midday break, pretty nice move you got there on Disney. So listen, I know how I talk about how this is Groundhog Day. You give me any stock, you give me 5 seconds, I can analyze it and tell you where it's going to go. So, again, we try to stay with our list that is the most active. And by the way, back to the Home Depot, stock's got little volume with a big spread. No one should be overly excited about trading this, but look what it just did. Just rolled over through the VWAP, dropped $1. I mean, and there's the VWAP break at 310.70. There's no bid till 309 right now. So, but look at what's happening on the Home Depot. Even though it's trading 310, 309, 16, the massive spread and the lack of liquidity. Let's say you did get short at 110.70. you're only able to get out right now, let's say at 110. You can't even capture the other 80 cents. So on a better platform, you could join the bid and hopefully somebody hits your bid and you get to capture the spread. And again, if you're trading illiquid stocks, sometimes you could be in a winning trade that you can't get out of. Because right now, if you're trying to cover, you got to pay to 310. And that's 50 cents, possibly, 80 cents more than you should have to pay. But also what Home Depot's providing us right now is still a reason to buy it. I'm looking for it to be a buy today, but I would love to see it plummet first, knock everybody out of the stock, crush their hopes, destroy their dreams. And that's where we come in. And we pick it up from them after they capitulate, like Josh Brown did on June 17th.
The week long, setting up some nice trades for the VWAPians over there, waiting for that perfect entry. And I love a nice faux show bro. You got to be liquid and loving it. That's the Kenny Glick style. Let's get into some more liquid stuff when we talk about oil. Oil news, U.S. crude oil prices dropped after investor worries over Chinese demand and an abundance of supply. It's a double whammy hitting the market, said Ole Hansen, head of commodity strategy at Saxo Bank. The demand side is showing weakness. Supply could potentially set up. Gary, you're an oil man. Is oil going to be the downslope over an imbalance of supply and demand, or is this just a temporary bump in the road?
Well, it's a temporary bump in the road, but it's a question of how bad this gets and how bad the supply issue or how bad this demand issue is moving forward. Look, the U.S., we are seeing the lowest amount of gasoline demand since summer 2020, and that's when we had COVID raging and everybody was staying home. So is that temporary, or is that going to go away in the next month and a half? I am largely avoiding the E&P space for about a month. I'm going to wait until September. We're going to see how this market kind of shakes out, and then we're going to see what happens with the government and the Strategic Petroleum Reserve. Is the government going to stop selling 1 million barrels a day? And if so, how is that going to impact, likely positively, the front month contract of oil? I'm not getting in the way of this right now. I'm focusing more on internet stocks. I'm focusing more on companies that are part of the would be effectively oversold right now. Energy, there's a bull case for oil at 130 by mid 2023, but there's a bear case in the next 6 weeks that it hits $75. I want nothing to do with it. I'm moving into other areas right now.
All right, well, guess who is entering the chat right now? Mark Sebastian. We're going to bring you in here. .com. Hey, Mark.
What's up?
What are you seeing for oil futures, Mark? What way do you think they're heading?
Oil, betcha there's going to be some volatility.
Wah, wah.
Yeah, I did that. Oil futures are ticking up a little bit this morning after yesterday's kind of drubbing, hanging around right around $90 a barrel. So they're kind of in no man's land. I'm with Garrett. As it starts to get toward $80, it's a buy down there. There's just too much natural, I think a natural floor there between 75 and 80. So that's a time to accumulate the net oil conglomerates or different oil stocks. And then in near term, when it gets toward 100, 105, that's time to take some money off the table. I'm with Garrett. I think the base case long term is oil moving higher, but short term, expect to see some fireworks. We've seen it. It was up, nearly $1 this morning. Now it's toward unched. Don't be surprised if it goes negative to end unchanged. So a lot of volatility. Starting to see an uptick in the OVX, which is the VIX of oil options. So there's going to be, I think, a few fireworks here and a lot of volatility. Not a place where you want to be putting in multi-day bets, but an opportunity to, I think, day trade and make some very short-term bets when things get oversold or overbought.
Check this out, guys. It looks like Morgan Stanley is sniffing around Revlon. Nice little glow up there. New filing came out yesterday. They purchased around 400,000 shares of the bankrupt makeup company. Kenny, shares in Revlon skyrocketed 27% yesterday. What's the VWAP story? And can we get in some Revlon plays before it eventually wipes the fake lashes off and goes to zero?
Yeah, Revlon. So that was another one. Again, When we talk about watch lists, is Revlon on the watch list? Of course it is. We've been watching Revlon for over 2.5 months since that miraculous move that we were involved in at $1.13. Remember, we were very excited when from $1.13 to $2.50 that day, and then it got halted for 2 days and came out of the halt and went up 500%. The stock's on the watch list every day. So yesterday, take a look at what it did. I don't know if you guys were around, but hello. And this is just like any other trade. So we didn't catch the first move, but check what it did. So by the way, this is a $6 stock. Here's your VWAP break. And again, if it's on the watch list and you caught it, this came right out of my chat room. Someone said, hey, Revlon's breaking. I was like, ooh, it is. And I missed this entire move. But then the miraculous thing about VWAP is it gives you another chance. There's so many good reasons to only trade VWAP. There's one of the greatest reasons. When you miss a move and it comes back and refreshes at the VWAP, think of that as Popeye, who's running out of steam, and Brutus is kicking his ass, or Bluto, whatever his name was. And then he takes the spinach. And next thing you know, he's Bluto, right? Right.
Bluto.
Kenny.
And next thing you know,
VWAP
he's
is
off
the
to the
spinach.
races.
Yeah, we're going to get into some more VWAP talk. By the way, someone in the chat is saying Morgan
Kenny
Stanley is a
VWAP man?
VWAPian. Could you imagine the hazing Morgan Stanley would have to get into the VWAP room? But anyway, guys, Kenny, I want you to talk more VWAP and more Revlon with Garrett. I'm going to jump in the chat, take some volume profile requests. So far, I got NVIDIA and Bed Bath & Beyond. Take it away. I'll see you guys in a bit.
All right. It is 8:53. That's your lucky pick 3 number of the day. Kenny, we're back with the same names. Nothing changes. Revlon, SIGA, VERU. What do you got? What happened yesterday for those who missed out?
Yeah, again, listen, the buzzword is watch list. The market is our watch list, my friends. Today's watch list. Now, again, when we talk about the watch list, there's the overall market. We never know what to expect. I didn't think I was trading Revlon yesterday, but it showed up. FRZA keeps coming back. VEE is now on the watch list. So this morning, what you add to the watch list is the Home Depot. You add the Walmart. And I want you to add HUYA because they reported earnings. And I also want you to look at another one is, what's it called? GLBE. So again, I don't know if you know about these stocks, but this one's gapped up pretty big. So add them to the watch list. And the idea is that if they've reported earnings and they're gapped up, more often than not, they will retrace back to the VWAP. And if they break the VWAP on a stock that's gapped up and they break the VWAP, more often than not, they follow through to prior levels. So this stock, if you see it right here, the VWAP's 30. That level where it broke out from is 29. That could be your trade. I don't know what GLBE is, but now it's on the watch list. But going back to yesterday, you don't know when the Revlons are going to explode. But if you have them on the watch list and you see, oh, there's Revlon moving, let me go check that out. And next thing you know, you're in a Revlon trade. And that's how we trade. The day is fluid. We are liquid and we're loving it, just waiting to see action on whatever we're watching. But if our watch list is dead, because listen, Home Depot and Walmart could be just bore fest today. Home Depot could just sit here in a 2-point range and chop you to living into smithereens. And then suddenly something like, I don't know, G-Box comes along. Woo! Look at this thing. You guys remember this stock? We liked it at 40. I think this was a $40 stock. It's trading at $1.50. You think it's got some room to go? So this is how we do it. Look at that, my friends. So what you're looking at here, and this is how we discover ideas. G-Box. I just pulled it right off the most active list. It just gave you a reason to watch it because look, chopping around at the multi-day, inability to break down, that's bullish. And then the bulls got really excited and tried to break out, but it failed. So right now it's kind of in limbo. The stock will not stay in limbo all day. So chances are if it's under the VWAP and then breaks the 150, this stock's going back to 125. But if it consolidates and stays above this range, back above the multi, back above the 1 minute, and then back above 167, chances are it's going to go flirt with its old friend 188. So
all right, Ken, real quick.
G-Box is on our watch list. Yes, sir.
All right. So tell me about Li Auto yesterday, because that's a name that obviously comes back into the fold after This is what, another one of these Chinese auto companies that we don't pay too much attention to, but reported earnings, classic earnings reversal yesterday. Give us a little bit of a recap of this, because what are we looking for today in other earnings reversals?
So which one? I don't trade that one. I think you said Lee Auto. I was trading
LI is the ticker.
Oh, that one. Oh, yeah. I don't even know the name of the real company. Yeah. Well, this one kind of made a fool out of me because I kind of got bored. And again, listen, we have a set of rules, and they're on the website. Boredom is not a reason to sell. So this was fun because I just showed why not to get out of a stock. The VWAP, we got the VWAP break, we got the pullback, and everybody starts buying the stock right around here. And then it kind of went sideways, and we kind of got bored. But then it did make another move, and now we're sitting here with profits. And this 5 or 6 minute boredom, so to speak, kind of just made me, hey, Isaac, listen, I'm going to take my profits. I'm going to put a tight stop on. If I get stopped out, I do. That's not a reason to trade. The reason to get out of this stock, yeah, you sell some for a profit, but then now you're sitting in the profit. You put a stop on it where the pullbacks occurred. My error was I just decided to put a tight stop on it, and I got out. Look what happened after I sold. And by the way, if you're frustrated trading, I've been doing this my whole life. This is why it's frustrating, because as soon as I got out, the real move ensued. And here was 31.85. Stock spikes to 32.50. That was the break even. You couldn't get there, but look at what happens. This is the magic moment when you consolidate and you hold the area from where it held prior. That's me. That was my price. So I had a chance to get back in, and then lo and behold, all that consolidation and all this hour long of just pent up fury exploded with a 2-point move out of nowhere, and you got yourself a 1 minute multi-day VWAP reversal. And some of my players were in it. I didn't trade it properly. And again, we're only human. We still make mistakes. You try to limit those mistakes to as few as possible, and that's how you do it. Look, I left a huge trade on the table yesterday, and I'm not going to let it happen again. So that's why every day it's pretty much the same day for us. LI on the list yesterday, I could care less about it today. I'm looking at Home Depot and the Walmart and whatever's in play today. Will I go take a look? Sure. But most of the time, we're going to stay focused on who reported today and who's in play today, because those will be the better moves.
Anything else you're watching? I mean, look, I look at companies like Evgo. ChargePoint is on its way to 20, as Chris Johnson and I said a couple of days ago. Geo Group, the only thing that Michael Burry is owning, is up 7.3%. And you've got AMTD also on the move today. Again, another 26%, $13 million, or 13 million shares exchanging hands before the bell.
That one actually had an interesting move already, and now it's kind of rolling over. But the ones that are in play are 8Ball's new, watch this, VEE. This one keeps showing up. FRZA, which is out of control. And then MEGL are the ones that I'm looking at. And this one is the most interesting one because it has faux showed. And now possibly you're going to get the bro. But remember, friends, this was a $9 stock yesterday. We were in at $10.50. It went to 24 and then back to 18. These are widowmaker trades. So if you're not trading on a platform where you have easy in and easy out, it's very difficult to be typing and canceling, correcting, and putting stops in on stocks like this. But if you have a better platform, want to see how fast I can trade it? I'm in. I'm out. I just traded it. If you can't do it like that, I wouldn't trade these stocks. Okay. Now, again, it's about to bust out again as we're sitting here, which is pretty fascinating.
17% to start the day.
And there she goes. So again, that's it. We're just looking at patterns. And this pattern is a bullish pattern, even though it was going down. It's the fake out, shake out, and now it's trying to break out. And again, definitely going to be on the list today. Right now, if you're long, I would still sell some up here. But again, just be cautious with what these things are doing. These are the type of stocks that when they start to go down, they get halted, and some of them don't ever come back. Okay, so please make sure you have a good platform and stay liquid, and don't forget to sell while you're making the money. Don't wait for them to start rolling over, because that lack of liquidity and their small cap nature, these are the ones that get destroyed in snap of a finger.
All right, everybody,
Right now.
sign up for this is VWAP.com for more Kenny. He's going to be back at a preview of the Warlocks World at 9:15 this morning. And I've got a big shorting opportunity coming up that we need to bring back Voss to discuss right now.
All right. See you later, Kenny. Garrett, that shorting opportunity is this Thursday. You got a special midday momentum show. What can the good people expect to see or short on Thursday?
Well, we've seen 4 major events this year where the markets rolled over. January 13th, April 6th, February 12th, and that June 8th period where hedge funds had the strongest dumping in 15 years. And right now we've got this rally in this market that just continues to run. We're hitting that 430 resistance level, and we're going to make a decision in the next couple of days of whether or not this market's going to roll over or not. Now, if it doesn't roll over, that's okay. But I'm going to walk everybody through what is happening in this environment, why markets are overbought right now, and what happens if the cascading effect begins, where people begin to sell and start to take profits, and how quickly that selling can amplify from a 430 turn on the SPY down to 400 within 2 weeks. It's happened 3 times this year. We've had 4 big sell-offs. So this is going to potentially be another massive leg down, whether it comes this month or in September. We want to be prepared for it.
But Garrett, why wouldn't we get into a short right now while stocks are on the rise?
Because momentum tells us not to. Right now, there is effectively no selling in this market, which is insane. Because if you go back to June 16th, June 17th, when really it was the time to buy, there was virtually no buying in the market. Everybody was extremely bearish. What is happening now in this environment, however, is we've had 9 straight weeks of pretty much peak negativity among institutional investors, according to Merrill Lynch. Now we're starting to see a little bit more positivity. Now we're seeing a lot of people say, hey, let's go long on stocks. The S&P 500 is going to 5,000. Right now, we are simply watching the buying and the selling, the volume coming in and coming out. And until we start to see a breakdown in both buying and an increasing pattern in selling, we don't want to start to short. So yes, it does look cheap to short right now, but we are looking for a momentum switch. And at that point, that will be the optimal time to short, just as it was. Go back and look at the SPY chart. January 13th, February 12th, April 6th, and June 8th.
Garrett, you've been teasing us that the mother of all shorts is coming soon. Is this it, or is there another major shorting opportunity that you have ready to go?
Well, again, I don't know. I can't tell you when it's going to happen in the future. All I can tell you is that it's happening in real time. And that's the key thing that we're looking at with momentum in this market. So when we talk about the mother of all shorts, we're talking about a situation where the SPY can keep running. We're at 430 right now. We have a possibility that next resistance level is roughly around 447. Keep going higher because the numbers are still extremely negative for this economy. There are obviously deep concerns around third quarter GDP. There are questions around the Fed with its upcoming meeting and whether or not inflation is entrenched. Again, all of this stuff is negative, but it doesn't mean that I start to short today. It means that I am waiting for the specific day and that I have a watch list and a number of names, an action plan that when I am going to be greedy about the next short, I know exactly what I need to buy, what puts I need to purchase, what inverse ETFs I need to own, and what I need to sell to get out of the way of this potential sell-off and ultimately make 200, 300, even more percent based on just 1 to 2 to 3 single day moves that have repeatedly occurred this year in 2022.
All right, everyone, make sure to tune in to Garrett's Midday Momentum this Thursday for a special insight to that. And as we always remind you to sign up for middaymomentum.com to get in on those trades. Thank you so much, Garrett.
Have a great day. Talk to you soon.
Thank you. Now we're going to get into your volume profiles by request with the best indicator in the world, my hair. The volume profile. Okay, guys, we have Coach Coyle. Hey, Coach wants us to look at NVIDIA. So we're going to take a look at NVDA. Here we go. All right, NVIDIA. Again, made a nice trek above the point of control. Your support here in NVIDIA is 183.88. The real takeoff here, you could start to get into a long position here. If you want to wait till after the Fed minutes, that's fine. But the real takeoff is going to be 202.54. That's going to get us to 213, 214. So we're above the point of control. NVIDIA is highly tradable right now. Again, if you want to wait till after the Fed minutes, you're a little bit cautious about that. Gosh, God forbid we get a gap below the point of control. That would be a new area of resistance. But if you want to risk for the biscuit or you really like NVIDIA, there is very strong support right in this area here at 184.64 to capitalize on the upside. All right, I want to do a little strategy trading the volume profile because we've been having a lot of nice opportunities here. The key thing to look at is the point of control, which is, as Garrett was saying, there's the mother of all shorts, and then there's the point of control, which is the mother of the volume profile. It's a highly tradable area. If you are above the point of control, you want to trade it to the upside. If you are below the point of control, you want to trade the stock to the downside. But just because you're not near a point of control doesn't mean that there aren't other trading opportunities to take in the volume profile. You also can look at nodes. Now in Bed Bath & Beyond yesterday, check this out. We got past this node at 1290. See, it's not as big as the point of control. It's not as big as this guy either, but it's still a significant area. So the way you would trade this is if we get above this, you want to chase this to the upside. So we captured this area and we hit the top of this node. Now look exactly, and this was here before. This node was not created yesterday. This was here yesterday. Look exactly where we hit. We hit the top of that node. So if you see price hitting the top of that node, that is when you would logically want to get into a short-term short position and trade the close. We've been doing this a lot, getting into some swing trading, playing off of these different nodes. Like, okay, we hit a resistance here. It's logical that in the next few days, we're going to roll over. So looking at something like Bed Bath & Beyond, you want to take advantage of these nodes. And it would be logical yesterday, 1711, that's where you want to get into a short-term short position, a short-term short. And look, lo and behold, we are down with that today. All right, we're going to bring on Mark Sebastian. Mark!
Hey.
Bad boy of options. We talked about Bed Bath & Beyond. We also talked NVIDIA. Is the options chain telling us any more to the story?
Yeah, so long term, we all know Bed Bath & Beyond is going lower, right? That's something that we should acknowledge. Even if short term, it's moving around wildly. Now, here's the problem. You want to, and this is another thing about volatility, right? You want to buy puts maybe in something like Bed Bath & Beyond, but the problem is that the implied volatility is now 280. So if Bed Bath & Beyond drops, let's say even $5, and you buy a put, implied volatility could come in so much that your put still loses. Prior to this move, implied volatility in Bed Bath & Beyond was about 130, still really high. It's now 280. So it's got 150 vol points to drop. So you go out and buy something long term, you're going to get smoked. So what does that mean? How do you trade this? You can spread. That's about the only thing that you can do in Bed Bath & Beyond to take advantage of long-term trends. So a trade that makes sense to me, and this is something I talked about in Profit Revolution, is like a broken wing butterfly, a put debit spread, something along those lines in January. So for instance, the January $10 puts are $3.25. $3.25. You go to buy a put there, and yeah, you know, you're getting some short delta, but the amount of Vega that you are buying, Vega is that exposure to implied volatility, is astronomically high. The Vega is about $2.55. So think about this. It's a 16 delta, and we drop $5. All right. So that, and let's say the average delta on that $5 move is 20. So 20 times that $5 move, those puts would theoretically make well over $1. But the problem is, if implied volatility comes in by 100 points at $2.55, that option is actually going to lose $2.50 in Vega. So you made $1 on the move, but you lost $2.50 buying that option. So that $3.30 option that you were right on is worth about $1.80. And that is what can happen to you if you don't know what you're doing with a name like Bed Bath & Beyond. So the answer is you have to spread. You buy something like the 15 puts and you sell a bunch of the 10 puts, or you buy the 10 puts and you sell some 7 puts. The only way to make money on a name like Bed Bath & Beyond if you want to set up a long-term short.
Nice education there. Exactly, Mark. That's a great point. You could be right about the direction, but if you choose the wrong way to play it with options, you can get sizzled. Speaking of sizzling,
absolutely,
Mark, you're rocking the classic hedge fund manager tan. I'm really digging it, Mark. I'm really digging it. You got the look.
Well, it's not unbearably hot here in Austin anymore, so I can go outside.
So you can go outside and get a nice
feeling good. Speaking of feeling good, you're going to feel good if you take advantage of my special offer that I've got coming out for the Inside Money Trader. Now, I'm going to be doing my next Inside Money Trader tomorrow. I also have Lifetime live today at 2 o'clock Central, 3 o'clock Eastern time. And this is your chance. $49 for a month of access to the Inside Money Trader. That I filled up my tank yesterday, and it was $100. So we're talking half a tank gas for the opportunity to look at a minimum of 2 trades a week, get a live session with me, daily live sessions with Brian King, and access to all my educational videos, the trading course that I built to teach you about Inside Money Trader, and access to the special tools that I built for Profit Revolution short term. So this is just the opportunity to try out Inside Money Trader. You've been thinking, hey, you know what I need more of is really good trades and dad jokes and a community that really cares about each other and dad jokes. That is where you go to try that out for just $49. I mean, I can spend more than that filling a Starbucks order for the Monday Morning Live team when they send me out. I don't know how I end up being the coffee boy, but when we got together, Garrett just looks at me and goes, hey, Mark, here's $50. Go get us coffee. And I was like, oh, okay.
You got the charm.
Set me back to my clerking days. But anyway, folks, this is what you can do for a Starbucks order, for a fill at Taco Cabana, or to half a tank of gas, or whatever, you name it. This is your opportunity to try it out. I urge you to try it. This expires Wednesday at 3 p.m. Eastern time. So sign up by clicking the link that you're seeing right in front of you, or call Gabe or Opalo and his team, our Angel Gabriel, to join me in the Inside Money Trader for just $49 for a month. And hey, do you know the website for Inside Money Trader?
Well, what is it, Mark? Do tell.
It's insidemoneytrader.com. I bet you didn't know that.
Really? I mean,
yeah.
That makes a lot of sense, Mark. I mean, I can't believe it. I just sat here and I somehow spent $49. So why don't you put that to work? Join Inside Money Trader, Mark. You've already hit 92% for those members in just 2 weeks, and you can get a taste of what Mark does behind the scenes with Profit Revolution and get access to those proprietary trading strategies for $49. Guys, I'm gonna be mad at you if you don't join this. I mean, this is the best opportunity we've ever had here on Monday Morning Live. And Mark, thanks for explaining that to us. $49.
And this is not, and folks, this is not an offer that's being emailed out. It's not an offer that's being sent. This is only for people that are live listening in this room that have access to this deal. All right. So if you're listening, this is something specific so that we can see the way that you support Monday Morning Live. This is something that we're kind of checking, right? We do this for free. We don't have advertisers, but we do offer our own internal services. This is your opportunity to support us and join in with me. And again, you get those great trades, lots of amazing education, great community, dad jokes, and dad jokes.
What more do you need? And also, once in a while, Mark will do a coffee run for you too. Mark, thanks so much. We got to head to Kenny Glick in the Warlocks world for a little special preview. If you want to get inside Money Trader, make sure to call Gabe or click the link in the chat. There you go, an exclusive offer just for you, for us. All right, guys, Kenny Glick up next closes. I'll see you at the bell.
Good morning, Money Morning Live, VWAP, volume weighted average price. If you have no idea what I'm talking about, you are about to learn, because Kenny Glick is coming to the main room for the next 13 minutes. Then I'm taking him out of here. We're going to Warlock's World, and only members can come join us. I hope that over the next 12 minutes, you guys decide to come with us. He's going to be looking at a few symbols today, QQQ, SEA, WMT, and more. If you want to see how he's trading these, tune in, because we're bringing in Kenny Glick in 5, 4, 3, 2.
Hey, what was that one you just said? Home Depot, SEA?
SEA. I was told SEA. Are you not looking at SEA?
I don't know what SEA is.
Maybe I should look at SEA.
Maybe that's the miracle. Maybe you know something I don't. No. I don't know what that is, but it's the ETF Series Solution US Global Sea to Sky Cargo ETF. Yeah, say that.
I was given bad intel, Kenny.
Wow. Yeah. I don't know what ESLT is either. So I don't know who's got your... Maybe it's the 50-50 guy. He's trying to fool us.
Oh, my goodness. Let's get rid of this screen, then we'll go back to this. Sorry.
Yeah. So, yeah, it's Home Depot. Again, you're seeing why pre-market trading could be detrimental to your health. Even when you're right, you're wrong. And that's what happened. Let's say you did short it there and it went down. You know, if you nailed it at the 310.80, the stock was 309. Remember when I was showing it to you earlier? But if you tried to cover, you had to pay 310. And because that lack of liquidity, the shorters start chasing to cover. And then the longs see that and they start buying, and then the stock spikes out of nowhere to 312. And then by the time you're thinking about trying to sell it, they drop the bid $1.50. So again, the lack of liquidity could cause you a lot of problems. So I'd be waiting to see it with the volume coming in. And again, if you're trading options on it, don't. MEGL. So, look, same kind of thing, right? There's money there. But if you didn't take the money, so here's your ass crack VWAP break, 2084, got you $22. But if you didn't take the money, now you're losing money on the same trade 15 minutes later. So one of the easiest rules to remember: sell. Take profits, always. You're in an $8 stock and it moves 12 cents, get out of some. You're in a $20 stock and it moves a quarter, get out of some. Not every stock's going to go from 20 to 40. It's a rare thing for having to see stocks go up 100%. So you have to just trade them according to what normally happens. Obviously, MEGL is not a normal stock. And if anybody remembers this one from a couple of days ago, I didn't see it in here. I'm told this stock actually was up at $250. Now, forgive me, I just learned of this thing a couple of days ago. But seriously, I don't know if it was really up at 250 and plummeted to 8. That's why people are interested down here. They see, wait a second, this thing was $250 6 days ago. I'll give it a shot at $8. And next thing you know, it's at 20. This is the market we're in right now. The frenzy of these stocks has come back in a big, big way. And again, is it the end of the bull move? Because usually when you have these, what we call the dash for trash, right? The dash for trash, it's usually meaning that the overall market quite often has run out of steam. Nobody wants to buy real stocks like the QQQ and all the big cap. So they go into the ninth circle of hell of stocks, small caps, bulletin board, pink sheets, penny stocks. These are all generally worthless stocks. But if there's huge volume coming in, and if you know how the market works, it's all supply and demand. So if, like that other stock, HKD, there was 9,000 shares available to trade. Seriously. There was 9,000 shares available and everybody wanted them. The stock went from $13 to 2,555. No joke. It really did go there. And then within a couple of days, it's right back to 192. And chances are it will go back to $13. Imagine you're that person up there. You're never going to see your money again. Imagine one share cost $2,500 from 13. So remember this chart, because every stock is a pump and dump. Every stock's a pump and dump. And you should always remember, any stock could do anything. So when you're trading these stocks in the pre-market, please be careful. And I wouldn't even trade them if you don't have a good platform. If you can't get out quickly, I wouldn't trade these stocks. But when you graduate and you learn how to trade and you stay focused on earnings reports and you start getting a feel for how to trade in real stocks, then you could branch into those crazy ones. So Home Depot, right? Again, look at the spread on the stock. 300,000 shares isn't terrible, but just put it in perspective. Look at MEGL, right? That's 6 million shares. Look at FRZA. As volatile as these are, at least there's volume. So you're able to get out with some sort of flow. Home
We're
Depot,
not seeing those, Kenny.
What's up?
I think you were popping them into the wrong chart there. They weren't popping up for us. We're seeing Home Depot.
Yeah.
Right.
Okay.
Okay.
Home Depot. Yeah. What are you saying?
When you were popping over to the other symbols, they weren't popping up on your charts for us. That's all I'm saying.
Oh,
maybe you didn't intend to.
I wasn't, yeah.
Okay.
Just showing you the spread and the volume.
Sorry, Kenny.
It's all right. So yeah, and then there's the open. So I just want to just say a couple of things for some housekeeping. There are no trades. If you've been losing money in 2022, stop doing whatever you're doing. If you don't understand how VWAP works, stop trading right now. If you've been losing money trading, and again, when I say trading, I'm talking about what I do. I'm a real trader, intraday trader. I don't really care about what happens tomorrow or the next day. I'm just looking for the action around VWAP and trying to trade what we see. If this is new to you and you've been struggling, stop trading. It's fine. The market's going to be here forever. And these trades have been working for a decade. They're not going to stop working. But if you're failing at a trade that works this well, please stop trading. Don't put any money at risk. I didn't say buy Home Depot. I didn't say short Home Depot. We're waiting to see what it does. The more savvy traders that have been figuring out VWAP over the last 18 months, yeah, maybe you found some love and you've traded it. But if you've been struggling, especially with a trade that works as well as this one, please stop trading. Don't put any money at risk until you are comfortable with what you're doing. Because why lose money while you're learning? You're supposed to earn while you learn. And all the questions that you have about VWAP, I'll get around to answering them all. But the main thing is, don't lose money and don't trade options. Options are the worst thing you could possibly do because first of all, if you don't know what you're doing and you're trading options, I guarantee you will lose money. The stock, if Lisa's trading the stock, it's easier to navigate the stock because there's more liquidity. You get your option trade wrong, you blink, you're down 20%, 50%. And then that feeling of, oh, well, I'm not going to sell now because I'm getting beat up so badly. And next thing you know, it's 100% loss. All right. So my suggestion to everybody is, and again, with the Home Depot, 318 is a target, not where you want to buy it. 318 is a target. Let me just show you what's going on with Walmart, right? Remember I was talking about Walmart? Normally, by the way, this is not a real candle. Normally, I'm a fan of playing what's called the fade. Stock is up. It's up on an earnings report. So you think of the other side of the trade. Think about who bought it 2 weeks ago, or who bought it, 2 weeks ago with me at 120, and you decided to turn it into a swing trade because you thought the numbers were going to be better than they said they were going to be. And you've won your bet. So if you're in from 120, what are you thinking about doing right now? You're thinking about taking profits and cashing out. That's the anatomy of the fade. But in a bull market, there's less fading. I mean, you're getting it right now. This is a pop and drop, otherwise known as blow off top right now, right? So what Walmart just did was kind of blew off the top. You broke a new high and you came right back and broke under that breakout price. It doesn't get more bearish than that. And we're talking about a stock that's up big. And I'm saying it's bearish because what it just did was a bearish moment. But it's not bearish enough to get down under the VWAP and under that candle. So what this trade's already setting you up for is that price that it spiked down to is 138. That's going to be everybody's stop on earth. Everyone's going to see that 138. It just pivoted off a big fat whole number. So now, if it doesn't rally and break back above the 138.79, the 139 or the 139.35, chances are it's going to roll over. The profit takers are going to show up. And I would not be surprised to see the stock down at 137.15. Now, here's where people get in trouble. And it's too late to explain, so we'll just move on.
Well, let's go explain it in the Warlock's world. If anyone wants to learn,
all right,
they'll come along
just
with us.
letting you know, I got 0 trades on. I got 0 things going on. I have nothing going on. Nothing's being said. Don't get into any trades unless you know what you're doing.
Experienced one of the biggest financial crises it's ever seen, but that created an opportunity for trades. And Garrett says it's happening again. This Thursday during Midday Momentum, we're going to be talking about what Garrett is calling the biggest short of his career. You cannot afford to miss this event. Garrett is going to be setting up this trade and explaining why he thinks this trade will be one of the most beneficial trades you will ever see during your entire life. You have got to get in on this thing. Go ahead and click here on the screen to get this thing added to your calendar. We will see you this Thursday during Midday Momentum. Go ahead, click here. We'll see you soon. Hey, I have Chris Johnson, the man, the myth, the legend, ready to go live with the long and short of it. He's coming in to help trade the news, along with a lot of information on the NASDAQ 100 today and why that's going to impact your trading day. Let's go ahead and we're going to bring Chris in 5, 4, 3, 2.
Hey, everybody. Good morning. How are you doing today? What a great day. Tuesday, August 16th. Brandon, how was the weather in Idaho? Real quick.
Dude, great. We played, like I said, we played softball last night. The weather got absolute. It was that temperature where you're just like, there's nothing better. You know, it's the end of summer. The weather is beautiful. Like melts into your skin. Oh, it's wonderful. Absolutely wonderful.
I can feel
Thanks
it.
for asking.
Little. Oh, did you win or lose?
We won both games.
Nice. That's what we're looking for. Solid performance from Brandon and the team. All right.
Thank you.
Hope everybody is strapped in and ready to go. We've got a lot to go through. Everybody give me a knock in the channel. I need to know that you're there. You know how this works. I need to know that you can hear me and see me, and we will get right into it. Come on. Where's the stream, Brandon? Make sure we're not frozen up. Here we go. All right. There's Ernie. There's Subs Gil. Member 184. Give us a name. Let us know who you are. Jay, Steve, Old Kenny. Love Old Kenny.
Hey,
looking and sounding good. What's up, buddy?
Just can I ask a question here? Is there anybody who's in the chat right now, or anybody that's been watching Monday Morning Live, been watching CJ, who has never commented in the chat? Would that be ironic if we made them comment today for their first time? Like somebody who's never commented ever in the chat.
Pressure
be your
is
first time.
on.
Let's just see. I just want to see, or if everybody's commented, so be it. But I know there's going to be people out there who just have been watching on the sidelines and never put a comment in.
Clint Geo, I've seen that name before. Member Ramo, I don't think. All right, let's do it the old school way. Long time, first time. That's all you got to type.
Quarter pounder never comments there. Here
there
we
you go.
Danielle, yeah.
Yeah, right.
Sure, buddy. Sure,
long
buddy.
time. Yeah, lurkers. I want to see the long time, first time. There you go.
Those are called
Come
lurkers.
on.
Yeah.
You guys are what it's all about.
That's okay, too. I mean, lurking's fine, but we love to see the comments. But obviously, we like to see the people that are out there on the sidelines listening and learning, too. Put some comments in once in a while, and we'll try to get any questions answered. All right,
try to get it in. I did get the haircut spin.
Here we go.
All right. And by the way, I'm doing a reboot on Haiku Friday this Friday because between you and I, we completely screwed it up. So everybody, you got 3 days now. Put in your haikus, get them ready. 757. No excuses for myself or Brandon. A champion will be named before the end of the show on Friday. All right, what are we going to hit about? We're going to trade the news as always. Walmart's big up there. Big name is Walmart comes out and beats expectations. We'll walk through that. Also, we're going to talk a little bit about how some people in Congress might be pushing some stocks higher. We're going to get into Technical Tuesday. That is going to be talking about something I've been dropping a line on in the Discord for the last day, and that is one of my favorite things to look at from a technical perspective, the 10% premium. We talked about RSI. Now it's time to go with straight up price stretching here. I'm going to show you how it works, what it means today, and how you can use this moving forward along with the other bevy of signals that I'm giving you. We're still in a waiting market, just like Garrett. I'm waiting for Garrett. That day that he goes up. Hey, have you seen Les Miserables?
Dude, I've seen that thing twice, I think, on the stage.
Garrett's gonna
and then
be
I've
up there with the red flag. With the red flag. Not the resistance flag. Well, it will be there.
What?
Yes,
That's what
yeah. Yes. So we're going to talk a little bit about these indicators and what they mean. I'm also going to show you a list of the stocks in the NASDAQ 100. And I'll be frank with you. They're not going to be, go ahead, Daryl, say it. I'll be frank with you. They're not going to be a shocker, but there's a couple of little gems in here. We're going to talk about the 50-day, all-day, cool charts of the day, good news, bad news, all of it, top 5 under 10. And yes, the top 10 stocks, 25 stocks under $10 were bumping last night. I'll give you one guess. And what was the group of stocks that got shaken, moving and shaking yesterday? Again, maybe they're smoking. I got to stop putting these little, it was the weed stocks. It was the weed stocks. Brandon, let's jump into a little bit of the ahead of the market news. What happened? And this is something I missed yesterday too. I wanted to hit yesterday. Walmart, first of all, they get an A. That's right. Earnings weren't super great. You know, they came out and said a lot of what they've been saying, but they get an A for setting the expectations. I don't know how many times I can tell you that this is one of the most valuable things that a company can do. And it's hard to pick up on it unless you read between the lines or you look at how they're setting the tone ahead of earnings. Twice now, Walmart's come out and told you that they are trying to fight the battle of inflation. And hold on. Side note, I heard a great comment yesterday. Brandon, you can, everybody think for just a moment about this and inflation. I need to see you for a second, Brandon, because I am going through this, not struggle to the degree that we're going to talk about, but somebody on that major news channel that I watch, especially in the morning, a guy named Sully actually was interviewing somebody, and they were talking about inflation. And now we had this zero inflation number, and everybody's got everybody's got everything twisted up and all that. And the guest that he had on nailed, I think, exactly what myself, Garrett, Mark, everybody wants to say. And that is, this is as if the market has been gaining 2 pounds a month for the last year, and for the first time in 12 months didn't add any weight. You still gain 24 pounds, though.
That's
and
right.
You gotta
That's exactly it. What
and
are
I
you
thought that
celebrating
was,
for?
that was just a genius way to put it, that if everybody would listen to that analogy, they would go,
Yep.
oh, I get it. Walmart, though, let's take it back to what we're talking about, which I really do think I got to put that in the chat. Walmart came out and has been talking about how they've been fighting this diet. They've been trying to get into inflation. Now, the supply chain cleaned up a little bit for them, made prices a little bit easier, but they are out there. There was a great article on Bloomberg last night about how a lot of these end retailers are now fighting with their suppliers to try to get stuff on the shelves. That's right. Stuff is not winding up on the shelves because they're coming in and saying we need lower prices than what you're trying to sell it for. Heinz Kraft is one of the well written about examples that we've seen over the last month, where they just say, hey, we can't do it for this price. You need to pay up. Eventually it gets worked out. But Walmart, the champ right now. Watch 200-day moving average, though. We talked about the 200-day being the stock line that is going to start to trip up a lot of companies. It came out as a champ in the retail sector and did surprise everybody. It's been a little bit of a laggard. Don't expect this to drive the price of the stock up to 150 or so. Walmart has been, in my experience, when we've run into these situations in the market, a little bit more steady Eddie when it comes to the retailers, because everybody still goes to the Walmart. It's the same thing as the Kroger. The problem is their margins start to get a little bit lower. Keep your expectations lower on Walmart the way they're trying to set them. Look for a 144 right now, because that's a consolidation of a lot of the technical muscle memory over the last 6 months. And I think that's where you'll find traders starting to maybe back away from it. Walmart, great job on telling the market you're going to bring home D's and you bring home a B. You get ice cream and pizza tonight. And if you've been listening to me long enough, you know exactly what I'm talking about. Don't try to short this gap, though. This gap is going to stick around for a little while because a lot of analysts want to jump on Walmart. We're going to see upgrades over the next couple of days. Walmart, as I said, pizza and ice cream tonight. Next one I want to go down to, and I've got my pick, but it's going to be the cannabis stocks. Yep. Cannabis stocks started popping last week, and guess why? It's because the Senate is going to take this up, and who knows how long they're going to debate it. You know, a Senate debate can last 5 minutes, where they drop the gavel and say, hey, Let's talk about weed. No, let's not talk about weed. All right, adjourned. Or they could actually get into a little bit of a fruitful discussion and find out where we're going to be going. My guess is that it's going to be somewhere in between the two, because you've seen enough people now coming out talking about, first of all, the other companies that are getting involved in weed. Pfizer, I'm looking in your corner right now. And then you're also talking about the taxes. It's that noise again,
there?
Brandon.
What is it? You okay?
I think it's that old server. It's so happy to be running it. It's so happy to be running again that it's over here making noises on me. For those that don't know, I plugged in the big box. It's got like 120 billion records stored in it. Just doing a little maintenance on it. Anyhow, back to the pot stock. So we've seen Canopy Growers, Tilray, and Sundial take off here over the last couple of days. Let's look at a chart of one of my favorites here, and I think there's a trade in here for you. I know there's a trade in here for you. You just have to be a little bit nimble. Watch for the pullback down into the Bollinger Band on Canopy Growers. Yesterday we saw a surge in the volume. Today you're going to see a little bit of the selling into that. I know one person that's a night trader that was selling their calls yesterday on this. I think it's one that you reload up on 350. Conversations in Senate are going to happen next week. Now, think about this with me. You don't even have to think about it. You can see it. And I'll pull up one of the poor examples. We can look at a few of the better ones later if you like. But fuel cell technologies. Fuel cell, sure, clean energy, all the things, right? At least they're part of that clean energy movement. And man, I got into a heated debate last night with my neighbor up the street because he told me about how great the inflation. What do you think he said, Brandon?
Don't even talk to me like this right now. Don't even.
Go ahead. Say it.
What? He said the inflation bill was great? Is that what he was saying?
The Inflation Reduction Bill was great, and it's going to do so many great things. And I said, first of all, we refer to it as the Inflation Seduction Bill, not reduction, not anything else. This is the Inflation Seduction Bill. And he actually said, "Well, clean."
He seems fun.
Yeah, exactly.
He seems like
clean
a party.
energy is. Well, Daryl's pointing it out right now. It's one of these situations where it is Build Back Better. And I said, dude, this is Build Back Better light. They just spent a little less money in the clean energy. And his comment, God love him, was, well, clean energy is just right around the corner.
Well, heck yeah. Heck yeah.
I actually...
that's funny.
I actually used the example that you and I talked about how everybody's chopping down their trees in Europe right now so they can heat their houses. But it's going to be a hell of a romantic winter in Europe and probably a baby boom if you think about it. All those fires, because they don't have natural gas, UNG right here, looking like it's getting ready to break out in a big way now. Lots of headlines coming out about UNG. Penny Nation people, keep with me because we're going to hit a couple of energy stocks, but UNG looking to make the big break right now. That's for free. Build Back Better. That's right, Daryl. Build Back Better. Anyhow, it is what's with AEP? I'll look at it in just a second. But rolling with the cubes mostly in this particular situation, Kenny S. What did Kenny S. throw out there? We'll get to charts. We'll get to your charts in just a little bit. But in this situation, keep an eye on that natural gas. And when I go back to the pot stocks or the Senate, what the Senate is going to be taking up. And it is a shame to say that I had to actually go and check and see if there were people in Congress that have been buying some of these stocks within the last month or so. The answer is yes. Canopy Growers, though, breaks up above this $4 level, and you get a quick run to 5. Don't fall in love with these stocks. History tells us when they're going to take these up as issues, they tend to walk away without doing anything. Less pressure than the clean energy. And then finally, we're going to hit one more for you. This is from the headlines yesterday, one of my favorite old school grills. Weber. You got a Weber, Brandon?
I don't have a Weber.
Yeah. You got a Traeger?
I do have a Traeger. Yeah.
Ooh, you got the bougie grill.
Ooh.
Neither
like to
of them
smoke our
doing
meat.
Neither of them doing well. So do I. I've got a Smoky something or a Mountain something, whatever. It's old school. It doesn't have a computer. It doesn't have anything. Both Weber and Traeger, though, in a little bit of trouble. This is the discretionary side of the home builders. Home builder, actually, if you saw it, the sentiment started to drop amongst the home builders. It was reported yesterday. I'm not going to bang the drum, guys. I'm not going to bang the drum because right now I'm just sitting here waiting, tapping my foot, keeping my beat going, because at some point the music will start again. And that's when I'll start beating the drum again. But the construction home builders came in yesterday and said, yeah, sentiment is dropping. Our prices are still high. And we have the other problem, which is people are now starting to back out of deals. And I read my third article about how banks are now having problems refinancing the people who did construction loans 9, 10, 12 months ago when you had to line up. Keep an eye on this. This is going to be the equivalent of Merrill Lynch, Goldman Sachs, and all of the big banks buying mortgage initiators back in 2007. Mark my words. That was the sign back then. We're not getting the same sign right now, and it's not going to be as bad on the housing market. Big Cap will tell you in the chat if he's if he's awake that things are slowing down right now, but home builder sentiment actually dropped into the negative, showing me and you that things are now starting to contract a little bit among the home builders. Why does that mean anything for Weber? Because Weber has come out. A WEBR is your ticker symbol. And if you look at the monthly chart of this, here's your Weber. I remember when they had a Weber Grill restaurant in Chicago, and it was one of the hottest places to go, and they cooked on the huge Webers that were like 5 feet across. Sebastian knows what I'm talking about. Stock went up to $20 on its IPO. This is part of that 2021 IPO class that has just not been able to do anything. That's the only reason I show that. When the money was fat, they came out and got it. $7 right now. Yesterday, they popped above the top Bollinger Band after they gave you really bad results, and their outlook was no good. $7 gives way, and you're looking at a $6 stock on this. I don't like adding a lot of puts right now, but this is not a terrible one to look at it. Get out. 357. They still have that restaurant? I'm sorry, Big Cap. I had to say something. Okay, it is gone. I was going to say that would be crazy. Brandon, it was cool. They cooked your dessert on a freaking Weber grill. Big.
That sounds marvelous.
Sexy. It's sexy. I mean, you walk by and
what kind of dessert are we talking here? Like
cakes, and they put stuff in cast iron pans, like an apple, a little apple
like
pie
a Dutch
thing,
oven. Like a Dutch oven type thing. Oh yeah, that sounds wonderful. Oh.
All right, let's get into it. Micro to macro. Brandon, you got any questions so far? Weber, we don't like. You what? Yeah, my mouth.
I'm with you. We need some napkins or something. I love
having a little. Hey, by the way, semiconductors down 0.9% right now. Remember, the CHIPS bill is getting signed this week. CHIPS bill is getting signed. No, CHIPS bill got signed last week. Build Back Better 2 is getting signed this week, the Seduction Act. Keep your eye on the chips right now, because I've told you that is going to be one of those areas that's going to fall first. I am short the SMH. This is bonus content for you right now. Take it as you wish, but it's bobbling around that 250 level. And this is exactly what I'm looking for when a lot of the companies are in the exact situation we're going to talk about in just a moment, and that is a little bit overextended. Note the RSI right here is not telling you that the SMH is overextended, but this little thing I like to look at, which is I shouldn't take the lid off of it, but I will right now. Oh, I put the wrong one up there. There we go. This little thing that we're going to talk about, the 10% premium. Note that that's 10%. Keep that little nugget in your head. I'm going to give you a list of about 50 stocks. I think it's 53 that are in this situation, but 10% is a danger number right now. And notice, it is not overbought. This is why you listen to me on Technical Tuesday. Let's get into it. So, Brandon, you know how I feel about this market, right? Hi, my name's Chris Johnson.
You said it every day.
Hi, my name is Chris Johnson, and yes, I am bearish. I'm here for the coffee as well. And I'm not making light of Alcoholics Anonymous or anything anonymous. It's just that's the way I feel right now. No shame admitting what I've got. How many days? It's been, I don't know how many days since June 16th, since I gave you a bit of information that I should have followed myself. How's that for a little bit of a setup? The 50-day premium. The 50-day premium is something, and if you find this interesting, please let me know, because I'll give you more of these stocks as we keep moving forward. But the 50-day premium, 61 days ago, thanks, Brad. It's been 61 days since I've had a call in my portfolio, and no, it hasn't. I have had those. So Daryl's trying to rally up the troops to get some cubes puts out there. Pay attention to him, because I think he's on the right side. Daryl, we can talk about that in the Discord in a second. So what is the 50-day premium? Put simply, you can measure overbought, oversold situations a couple of different ways. Yesterday, we talked about the RSI and the use of the 14-day and the 21-day. How I use the 21-day simply because it's a little better or a little more effective. It allows the market to do exactly what the market likes to do, which is get overbought before a real correction happens. That's right. People like to push the envelope. So using a 21-day moving or a 21-day RSI allows for that. That's what 20 years of watching the technicals gets you. You understand that a 10-day RSI, way too fast. 14-day, it picks up a little more. 21-day, though, something gets oversold or overbought on the 21-day, and now you're talking about some action coming your way. There's another way, though, and it's simpler. Remember, there's one word, and it's a phrase. I am going to give you two of the words, and they're the middle two. Blank to the blank. What is it? Wilder RSI is good too. Don't avoid the Discord trader, Z-Trader. Get in there, learn it, and then watch its world open up for you. Going to the moon. No, not that one either. That's what she said. Regression to the... I shouldn't have to fill in the next word. That's what we're talking about here. We're talking about regression to the mean. Regression to the mean is a thing. I don't care if you're talking about a company that makes socks for Hanes doing their quality control. It's a numbers thing. I don't care if you're talking about speed limits and how people speed at certain times a day, and all of a sudden it averages out to some other speed because of regression to the mean. Maybe people are driving faster because they're late to work, and then they drive a little bit slower around lunch. You regress to the mean. Averages are averages for a reason, and that's why you watch them, including the most important average out there, the 50-day moving average. 50-day moving average is the most important because it tells you what the trend is doing, right? We've gone over that ad nauseum. If you're not watching the 50-day, you're not doing yourself every favor you could. And this is the easiest one. It's a green line on the chart, and it tells you very simply whether a stock is going to go higher or lower by a 2 to 3 chance the next day. It's that simple, and that's why you need to watch it, and that's why it's in green, because it's the most important one here. Red is one of those that has a little bit of an effect here. It's a 200-day moving average. We're talking about green, though. The 50-day premium is simply the difference between the closing price or the current price of a stock, an ETF, anything else, and that 50-day. The idea, I don't have one here. If I had the Brandon, where's a rubber band when you need one?
I don't know.
Remember when I had them? Remember when I had them all?
My kids shot some rubber bands a couple days ago, and they busted one of my lights out. I have like some hanging pendants in my kitchen. They shot it and the glass just shattered everywhere.
What kind of rubber bands are they shooting? Are they shooting rubber bands or rocks?
We get real mean with our rubber bands here, I guess.
Yes.
I don't know.
All right.
I don't know.
So we're going to have to act like there's a rubber band. And when you stretch it out, much like the RSI, if you stretch the price further away from the 50-day moving average, you get a regression of the mean. And that's when you get a retest, and then it goes back up again. Same thing when you go down. Go down, you go down too far, and it's just not natural. Remember, numbers are natural. They follow laws. Regression to the mean. That's why we have means or averages. Ohio Steelers. The red is the 200-day right here, and then the green is the 50-day, and the orange, I don't know why it's orange, is your 20-day moving average. So what happens when you get something that pulls too far away? Like this. 10-day premium or 10% premium. 10% is a magic number. When you look at the NASDAQ 100, and Brandon's got a special chart he'll pop up for you, just measuring the difference between the 50-day moving average and the current price of a stock, or an ETF in this case, can tell you whether you have stretched the laws of those averages. In other words, should you expect a regression to the mean? This chart is busy. It goes back to when the cube started trading back in late 1990s and shows you simply how many times we've seen that moving average get stretched beyond the means. I've got another one that's here that I'm going to flash up on my screen in just a second, but keep your eye on the chart that Brandon's showing you because it tells you a lot here. Back in 2001, 2002, we had a tendency for the regression to the mean to happen when we go above 20%, above 10%. 10% is your magic line, though. How many times, CJ, has it happened since 1999? 199 times, 199 days you've seen the QQQ trade above a 10% premium. 199 times. I feel like the guy from Ferris Bueller's when I say 99 times like that. So be it. So what happens? On average, the QQQ is going to pull back, and there's a big but coming in here in just a second. It's not going to be a Kardashian butt or anything like that. It's going to be a big butt. On average, the QQQ pulls back over the next 20 days, and it's usually by an order of 5 to 7%. And that's just on average. We're talking about averages here with the 50-day moving average. This turns into something that can be either a trigger or a healthy pullback, and there's where your butt is. Last time we saw a reading like this was back in May of 2020. Now, recall with me what was going on in May in 2020. All kinds of pandemonium was breaking out, and you had a situation where the market had fallen out of bed, kind of like what we saw now. It did so in about 20 days, not over a 6-month period to add up to the worst first half of the year. And I forget how many years, 50 years, whatever the number is. It doesn't matter because our memories are all relative, obviously, especially if you're looking at the market right now. Everybody thinks everything is great. But Brandon, let's go over to my screen for a second so I can show them the little more current view of this, and you can zoom in. That big dip that you saw right here is that is what happened back in 2020. That's your fall out of bed moment for the NASDAQ 100. And notice how quickly we were able to recover from that and go right up to a 10%. This is your May 2020, June 2020, as the market kind of bobbled around. So you can get what are called false signals from this. They don't happen as often. You need to combine this with what we talked about yesterday, though. The fact that we're overbought on the RSIs, and we also have the QQQs that are overbought. Now, let me go back very quickly to my confession at the beginning. On June 16th, and you can come back to me, Brandon, because we're done with the chart. 10% is where we're at right now. Actually, we're at about 11%, 11.5%. The law of numbers has to pull over on the cubes, and we need to come back down to that regression. Back to my confession, though. On June 16th, and literally, I think it was June 16th, you and I sat here and talked about 9% of the NASDAQ 100 trading above their 50-day moving average. That 50-day is so key that I've got probably half a dozen different indicators based off of it. That's how key it is. 9% of the NASDAQ 100. So 9 companies, and it's not 9 because you got a couple twinsies in there, the Google twins, you've got Comcast twins, that type of thing. It comes out to 102 in the NASDAQ 100, but you get the idea. 9 of the stocks that make up that 100 were trading above their 50-day. That's how oversold we had gotten as a market, that there were only 9. And that's a key number. Whenever you hit single digits on the percent of stocks in an index, in the S&P 500, it doesn't happen. It's around 13%. We hit 16%. 9%, though, on the cubes is that point where you almost just throw your hands up in the air like you don't care and buy a few stocks. And I missed it. I dropped my pen, too. I missed it. And since then, and for good reason, we had a number of things going on that you have not seen in your lifetime as an investor, because I don't think anybody, tell me in the stream right now, if you think you have seen a market that has as many moving parts as this one ever in your career. As an investor, as a bystander, I'm going to tell you the answer is no. Big cap, even you. No. Never, ever. Rainbow, that's the second time we've seen Rainbow today. And Rainbow told us earlier they don't comment. That's what we're looking for. So, White House, WH chaos? I'm not sure what that. Toughest market anybody has seen. I guarantee you. And because we think we're in control of this toughest market ever, that's not a good sign. So let's go back to the 9%, and then I'm going to wrap up this discussion because I want to get to some of your charts really badly. 9% was on June 16th. Anybody care to guess how many stocks are trading below their 50-day moving average right now? Somebody throw it out. Please let it be the first answer. I'm going to hear whether they've been listening or read whether they've been listening or not. How? I can hear it coming. I do like it when that happens. I've got to get some of the things.
That's so crazy bright. CJ, that was instant too. That was so... Look at you. You're like a... Look at me in a dark room now. Look at you. The sun is raining down on you as you go over this lesson. This is perfect.
If the pipe guys 9% came up at the same time that happened, I am going to church on Sunday twice. 9% is how many companies are trading below their 91%, a flip-flop completely from what we saw on June 16th. Completely. There are literally 9 companies right now from the NASDAQ 100 that are trading below their 50-day. The other 91 are trading above their 50-day. And guess what? Because I like you so much, I have put a list of the 9 stocks together that Brandon will now show you for about 30 seconds, and he'll say something about them while I make sure I can turn off the lights here for just a second. Brandon, show him that spicy list.
What this is the NASDAQ stocks? Is that what you're looking for right
there?
Here?
We go.
These are the stocks
yep,
with the bearish trends, obviously. What's that? Where you going, CJ? Oh, crap, he took off. But these are the stocks with the bearish trends. Baidu, Fortinet, Intel, JD.com. Monster's on the list. Interesting. Match, NetEase. I have no idea how to say the next one. CGen. These are a great list of stocks. I'm hoping CJ hurries back so that he can talk about these a little bit more, because obviously I don't know anything about them. So this is It is what it is. They're good. Oh, CGen on the list too there. Healthcare, interesting. That's one of the high dollar ones there at the end. All right, CJ, let's talk about this.
I'm gonna get some of those Tom Gentile clips that hold up the baffler, the light bafflers there. All right, let's hit the first one because you and I talked about this stock yesterday or on Friday. BIDU. Now, BIDU, it was yesterday actually, because we talked about how they're going to have earnings in a couple weeks on the 30th, I believe the number is. And this was our most interesting chart of the day yesterday. $136 right now. The Bollinger Bands have tightened, have throttled up on this company, telling you that you've got a volatility moment coming. It is one of the few stocks that are trading, 9 of them, below their 50-day moving average. Watch that as closely as you watch Garrett's insider trading. Watch it as closely as you watch Garrett's momentum. This stock has zero momentum, if not negative. It's going against the market. Now, when the market goes up or down, is this going to go down? Let's say when it goes down, hell yeah, it's going to go down. Look at the last time the market took a big dive. It was in March. The stock tried to pop up after an earnings call and went from 157 all the way down to 110. That's $40 on a $150 stock. You can do the math because I don't feel like doing it this early in the morning. Baidu right now being at the top of that list, I just love it. Matter of fact, I may go out and short Baidu. I'll talk to the night traders about it a little later today because this is one that you may just buy some time on. I may just buy some time and let it come to me, kind of like that Michael Burry guy. Brandon, did you see that headline?
Dude, I saw. Interesting, right? He kept what? One prison stock? Is that what he kept?
One prison stock. And I don't mean to spoil things, but it is on, this isn't a shocker, it's on the top 10 or the top 25 under 10 today. Shocker. So stay tuned for that. You can see the optioned activity. But does it make any sense? And I'm going to take that question in just a second. So Baidu at the top of that list, Match.com. I want to have Mark say that .com. Can we just get a recording of him saying .com so that anytime that we say a company with .com, we can have his voice? Like, can I get a Mark button? Like the Staples button?
Sure.
That was easy. That was easy.
Yeah.
All right. Yes, Josh, get me a button, please. I love that Mark Sebastian guy. Ooh. All right, 67.55. You know what? Match.com obviously screwed things up on earnings. This is what I call a little bit of a Microsoft rollover. Stock comes down, makes its way back up. Watch for it to drop through 65. This stock goes down. You know what? Their little counter company, Bumble, which I don't get the name of this company. Kind of one of my most interesting charts of the day. You're getting a bunch of them today, and it's not even down to the 200-day, 50-day, bottom Bollinger Band, $30. That's what you call a trapdoor stock, and we haven't used that term in a long time. It's not on the 9 list. It's not on the 9s. Put the 9 list up one more time, Brandon, because there was one more besides Match.com I wanted to make certain that I hit, and that was going to be, it was JD, and I was going to give you a warning about Intel. JD.com was the other. Many of these online retailers and catalog companies starting to see a little bit of the pressure. JD.com at 55, that's the trapdoor there. These are the 9 stocks that have been just hanging in there. Notice the activity on these stocks and how they haven't gone anywhere while the NASDAQ 100's gone up. Doesn't mean you can't short them. It means they don't want to go higher. The market's trying to pull them. But at some point when the market gives up, I was going to say something. This is actually going to sound bad, but I'll say it anyway. Did you ever go to summer camp, Brandon? Like kids' summer camp?
I went to scout camp back in the day, like that kind of stuff. So that was a little different because we didn't have the other gender there. So it was weird that much. So kids' summer camp would have been much better because then you could have chased the girls around too, you know?
Well, I did old school summer camp where you were on a lake in the Adirondacks.
Oh,
I
yeah.
forget the name of the lake. And the girls' camp was on the other side of the lake. So at night you
Okay.
see like the
Now we're
campfire going.
talking.
And you
Yeah.
do the little mischief of, hey, let's get some of the canoes out and get across it. And you always got busted because there was a counselor. There were counselors like sitting in the middle of the lake making out in a canoe, waiting just for us to come across. But we did a thing where you always had a rope exercise where everybody was going up a hill. And there was always a kid or two at the end of the rope that just weren't doing the work. And when everybody else got to the top of the hill and they needed to rest, the kid that didn't do the work that was at the end of the rope was the first one to go. That's what these companies are. They're going to be part of the first ones to go. They may not have as far to go because they were already only halfway up the hill. But there's your analogy of the day. You're welcome for that. And by the way, dropping your kids off at camp, whew, what a great parent moment. We need to do that. We need to start a summer camp in Idaho. Let's do it.
Yeah, you got it, dude. Let's do it.
I wonder if you can make money on that.
Oh, probably
anyhow.
not.
So let's go one step further. And yesterday we saw a list of stocks from Goldman Sachs that are among the most heavily, and everybody pointed at them because your companies like Bed Bath and Beyond and all the Reddit companies are going through the roof again. There goes your Bed Bath and Beyond. Go Reddit Army, go. I think this is going to turn into the stock that you watch. It's not going to be GameStop this time. I think it's going to be Bed Bath and Beyond. I saw an analyst's comments on Bed Bath and Beyond. Basically, this was last night on Bloomberg, basically saying, how is this company going to survive? And this is the kind of stuff I can't wait to see the headline that Bed Bath and Beyond is going to have a secondary offering at $17 because that will be the nail that I'll be looking for. That's when you just short it for everything you got. You have your Michael Burry moment. But anyhow, watching that short list is good. Watching the stocks with the 50-day, highest 50-day is also good in this market. Everything that I said about the 50-day premium, to bring it back to that consistent message. Watch this list. Brandon, put up the big one, and it's going to be names that you know. Tesla is on this list. Microsoft is now on this list. I should have put the actual percentages for you so you can tell. PayPal is now on this list. Airbnb is on this list. Lam Research, Starbucks. I wouldn't go out and short Starbucks yet until we see whether I got a sneaky suspicion because what's his name? Howard Schultz is supposed to be done with Starbucks, I think, in a month or two. I got a sneaky suspicion he's going to say, I'm back. I guess I'll stay. But these are the companies right now when everything starts to turn, you're going to want to keep an eye on them the hardest. Tesla and Apple maybe get a pass, Apple being the one that's giving you the most consistent rally out of all of the NASDAQ 100 stocks over the last 2 months. Just they can't be stopped. And it's because they are a bond. Speaking of bonds, everybody keeps asking me about bonds. I'm going to throw this one in there for a freebie. Keep an eye on the TLT as it starts to break down below that 114. Liquidity events or lack thereof may be coming up over the next month or so as the Fed starts to announce whether they're truly going to continue to tighten up on that balance sheet. If they do, the bond market is sending you a signal that the last time it sent was in November. I got to think of a way to just turn the chart upside down so I can be oblivious to this. But literally, folks, when I say it, I'm serious. Bond market right now is starting to send you a sign that it sent last in November, when it rolled its 50-day moving average and broke through and started its descent. Watch for that 20-day to cross down below, and that's going to tell you that momentum has turned negative in bonds, and that usually comes at a cost for stocks. Be careful out there, please. Be careful out there. High yield corporates, the same thing. HYG, they're going to be a little more... they're going to be a little more in terms of what you've seen active because everybody's gone after the high yields because that's kind of stockish, bondish. You know, everybody loves to get somewhere in between. And this is a great in between. 73 to 79, you got out of it 6 points to the upside. Again, watch a 50-day. It'll tend to follow the government, the long end, the TLT, which is what we're looking at. And notice that its cross didn't come really until December, but it was waffling already from September. It was an earlier one. The real signal there came from the TLT, and that is, and that was just a brutal, okay, we're out. Keep an eye on it. All right. The Fed has to buy it all. You are correct, and they're going to continue. That's part of a plan. Watch that Ray Dalio. If you haven't watched it, Ziggy will probably put the link up here in a second. Watch that 45-minute Ray Dalio segment on his book. It is stunning. It is simple, and it's something that each and every one of you should watch just to get an understanding of it. All right. Brandon. Hey, Brad. Well, I won't ask Brad to do it. I'll find it. You want to do some charts?
It's chart time, CJ. Let's go, man. Let's do what do you think? 9 minutes of charts today? 5-7 minutes of charts? Let's go.
People are going to love you if you do that much.
Let's do it. Let's do. Whoa, what is that?
Dude, that's what happens when you got, your own walk-in music. Your own walk-up music.
All right, let's do some charts.
There's your link for the Ray Dalio thing, just in case. It truly is interesting and educational, and worth the time. WBD is still a put. Yes. So I was looking at this last night and kind of doing that little ticklish, that little belly laugh. Whoa, I did WDD. There we go. Warner Brothers. I sent this to actually my Penny Nation people. If you were with me for Fast Profit Friday, this was your Fast Profit Friday trade. We bought the 13 puts, and guess what? 13 is going in the rear view mirror. You got a little bit of a bounce after that earnings. Remember I talked about the Microsoft bounce and fade? Here you go. This was a really crappy earnings report too, guys. Did you even know there was a cat girl? I didn't know there was a cat girl. Anyhow, Brandon, did you know there was a cat girl?
Cat woman, right? Are you talking
cat girl?
Cat girl? No, cat woman.
It was like the spawn of... No, it's okay. Cat girl. The movie stunk so bad, they're not even releasing it. Take the tax write-off. So, company bounces off the $13 level. Knew that was going to happen. Now you got to break below 12. I actually don't know what the target is on this stock, and I think I said that on Fast Profit Friday. I think you go for a 5,100. Manage it like you do, like you want. If you hit a 12, think about it. 12 is a 7% pull. You're going to get 50% off this option. I like the stock to maybe head back down towards that area of the market I like so much, which is under 10. 22%, Kenny S. Nice. Supergirl. No, this was Batgirl. Gap Batgirl. Mark, stop it. GameStop this week moves. GME. I'm assuming you want us to look at GameStop. It's moving because the Reddit people are moving. What? They've just lost their mojo. They haven't hit up GameStop. I don't know what's going on here because GameStop should be moving. You got a little pop out of it last week. Did the Reddit army actually leave GameStop behind? Did they leave a man behind? Revlon popping. Somebody asked for Revlon shares. This is weird. Brandon, didn't I say this yesterday? And I'm not saying I traded it or anything like that. I just said it's down in the 20-day. I think the stock is probably going to take off again. This is a brand name. Someone will buy it. Maybe Garrett knows what it's worth in terms of their name. I don't know how you put a name, but all the CoverGirl women and all of that stuff, Revlon's big. To think that they're going to go to zero is hard for me to believe. Look at Crone, CRON, shorting it down to $3. Watch for your little, your little Senate slide higher right now, because the more they start to talk about it going up for debate, and I mean it being cannabis, the more you're going to get people that are going to want to push this up to the 350 or even a little bit higher. And then I think you short it. This is going to be a sell the nothing. And by nothing, I mean no action after it happens. No, UNG is not a short right now, in my opinion. UNG, and full disclosure, I am long UNG shares. UNG is right now realizing the nightmare situation that's upon us when they're even talking about how we're not going to be able to ship natural gas to Europe. They'll start to figure out ways, but this is a pickup of the situation. If you flip this over, which I can't for you, Brandon, you have what we call a reverse head and shoulders. Here's your head, shoulders right here. Call the neckline $30, and you want to see volume start to pick up here, not drop. If your volume picks up, you're going to have a true breakout of this. My guess is you shoot this thing up to $35, $36 or so. This is, think about yes, MPK, absolutely. Think about the situation that happened when these commodities took off in February and January, and the sheer horror that were in some traders' heads as we painted this picture of what was happening in Europe. And let me recall it for you. You had wheat going through the roof. Wheat. Obviously, wheat is not going through the roof anymore. You also had the fertilizers, CF, potash, all of these. Now you're seeing some action coming back up through the roof. And actually, there are a lot of farmers that are now complaining about fertilizer shortages again. Watch your Mosaic, your CF, and a few others as they start to pull back higher. Basic materials are getting a boost from this, but none are acting like this guy. Notice crude oil is coming back down in USO. I think we're getting a little bit of a bump today, but you're seeing OPEC starting to rattle and say, hey, maybe we're going to increase production. That'll be something to watch. UNG, though, and I'm suddenly taking all the chart time myself here. Brandon, you're going to have to cut me off. I got a lot to say. UNG is the only one, in my opinion, right now, if you look at it, that has that same urgency/nightmare scenario attached to it that we saw back in February that drove prices through the roof. And that is because winter is coming. I never watched that show, so I'm not saying it for that reason. Winter is coming. It's 3 months away. I had the windows open here in Ohio last night because it was 62 degrees. It's going to get colder. Wendy Wu is going to start getting cold over in across the pond. And you're right. It is harder to ship natural gas, especially when the plant that you use to ship it from is still trying to get itself up to operating speed. Coal, we'll see. Not the clean energy. We can't. Can we start shipping coal after passing a clean energy bill? Or, I'm sorry, Inflation Reduction Act. AEP.
Seduction.
Somebody asked.
Reduction.
I still love the inflation seduction. I think that is just the best. AEP, you know what? AEP is obviously one of those, and if you live in Ohio, you know that AEP with the nuclear plants and all of the things. AEP has taken off, but guess what else AEP does besides running nuclear plants or tearing down nuclear plants and your traditional electric? Coal, they shut down about half of their mines. They got a great place up in northeastern Ohio called the Recreation area. It's recreation, where they've got more than 1,000 ponds. Anybody who wants to fish who's around that area, it's a phenomenal fishing area, and it is the prototype of what they want to do with all kinds of strip mining areas. The largest, what are those things called? The buckets, you know, that dug the stuff out of the ground, the coal out of the ground, right, Brandon? The largest one in the world is there because they took so much coal out of that area. I don't know, a digger thing. Anyhow, AEP is in the coal business. You also have Consol, one of their arms. Consol Energy is in the coal business. Look at the coal miners right now, and it's a shame that they got rid of that coal ETF. I think it was just KOL was the ticker symbol for it. Yeah, invalid ticker symbol right now because this thing would be going through the roof. I will look at Yeti right now for you. Brandon, you're going to give me the ticker symbols for the rest of the time so I don't hijack this.
You're
I'm the people's
out
person.
of time. That's okay. So that worked out great, CJ. We're so out of time. It's not even beep beep. Here we go. But guess what? This creates an opportunity. I see in your face right now looks like you failed, but you haven't. You've created an opportunity where we get to go. We missed this yesterday. The top stocks under $10. We missed it.
You know what else? You know what else we missed though? We missed the opportunity to encroach Mr. Sebastian's time.
True.
Maybe we take full advantage of that opportunity today.
Let's take 20 minutes today.
Yeah.
Here we go. Top stocks under $10, CJ. Here you go.
Folks, I hate to tell you, but the Mark Sebastian show has been delayed for 20 minutes. You guys vote. Do you want to see Mark or me? I want to see what the chat has to say while I go into my top 5 here. Do you want to see me stay around for another 5, 10, maybe 15, and go through every one of your charts? Or do you want to see Mark? Uh-oh. I would never do that to Mark. We just whisked the Heisman move. Whoop! Let's talk about the top 5. Tilray makes it up to your list today. 24, and it was the second most traded company in terms of their options. Second most, 193,000 contracts changed hands. Somebody make sure you ask Mark about WBA because I sent him a thing and he just said, yep, there was a lot of activity. Thank you, everybody. We should just get Mark in here again. Tilray, though, 193,000 contracts traded, 24% of the call open interest that was existing. That's what that 24% means, and 12% on the put side. The market is running to the bullish side of the cannabis stocks, and you can see that there's another one down there, Canopy Growers, number 4 on the list. $3.30. The stock was down 14% yesterday, yet 18% of the call open interest turned over in volume. I like these numbers. One footnote, we're in the middle of expiration week right now, August expiration. So you're going to get a little more of the volume that's going to be trading. But the other side of that is that the open interest for those August options is almost at its highest point that it's going to be. The high water mark will be Thursday. And then after that, all the open interest goes away. So it's big to have a number that is 27%. 27% is NU. NU, favorable mention by Berkshire Hathaway, and that's why you've got it breaking above the $5 level. Watch this stock to run up to $6.50 or $7. That's right. Berkshire Hathaway let let it slip, but his 13F showed us he still loves new holdings. The market loves it when Berkshire Hathaway loves something. GEO, I told you Michael Burry was going to be on the list. GEO is the ticker symbol of the prison company in Florida that he is now holding as his only holding in his $135 million, I forget how much it is, dollar portfolio. GEO down 10%. 764. I don't know why that says down percent. 764 is where you're seeing a trade. It's going to tap that 750. Talk to somebody, bring this up to 8baller when he's on, because I think this will be a curious one to watch run. What does Michael Burry know? Sundial is the last one that's on the list. It actually traded 112% on the put side. A lot more uncertainty around Sundial. That's not a great thing, because the market typically, and notice that Sundial looks like it's already out of gas. Sundial is the least my favorite. I actually put these in order. Canopy Growers, then Tilray, then Sundial if you're looking to trade this over the next week based on the headlines that are to follow. There's your list of the top 5 under $10. I love this list. Apron made the list. It's just below the fold. Also, Clover's there. We got a lot of stuff. Sabre. Hoot. All right. Night traders, I'll see you at 3:30. Mark Sebastian's coming in the door right now. SMH, watch your butt because it's 10%. It's not overbought, but it's 10% premium. Historically, that's something you want to watch. Regression of the mean. You guys had a great math lesson today. Love everybody here. Thanks for your time. I'll see you later today. I wish you the best trading success.
About what Garrett is calling the biggest short of his career, you cannot afford to miss this event. Garrett is going to be setting up this trade and explaining why he thinks this trade will be one of the most beneficial trades you will ever see during your entire life. You have got to get in on this thing. Go ahead and click here on the screen to get this thing added to your calendar. We will see you this Thursday during Midday Momentum. Go ahead, click here. We'll see you soon.
Good morning, come on in. It's a great big world and it's time to begin because you're taking it to Wall Street. I got your solution. The world spins around in a
Good morning, everyone. We are going live with Mark Sebastian, your most absolute bananas option trading specialist expert. He also knows baseball. In 5, 4, 3, 2.
Ooh. Man, they're starting to get a little saucier here with with this market. Folks, we are kind of taking a leg down.
We're
If
just
you're
going right
looking
in.
for
Just right in,
a
Mark.
momentum shift, today is the day. I'll get into it. Don't worry. We're gonna get into it. I've just got to, I've got to do making money stuff. So that is, one of the benefits of getting a guy like me is that I am always in the markets, and today is no different. I fully intend to. Wow, we just took a big leg down. I fully intend to turn this into a real opportunity to make some money today, folks. Put this guy in here, and then I will be done. Let's see. All right, now we're done because that market just took a nice leg down. It's good to see everybody. Good to be here with you. Ball's been kind of creeping higher all day, and now we get kind of this flush. If you're wondering, hey, what's shifting? Is momentum shifting? We listen to Garrett. I just listened to that great commercial discussing what Garrett's going to do on Thursday. You look at ARC down 5%. I'm going to go ahead and call that at least a temporary shift in momentum because just about everything just fell apart. It was like It was it was like that song "Total Eclipse of the Heart." You know that song? Once upon a time, the market was rallying up. Now it's just falling apart.
Are you singing
Nothing it could do. Total eclipse of the arc. What do we think? What do you think? You
I
big
think
fan?
you nailed it.
Oh yeah. Yeah. So as you can see, ARC just took it on the chin. So we got a lot to cover today. I'm going to talk to you about what's happening with VIX. I've been aggressively taking vol off the table today and putting on some hedges because you could see the writing on the wall while we were trading. And you're saying, Mark, what do you mean? All right, so what do you mean? I mean, we're going to talk about VIX real briefly. I'm going to hit you on some real big money flow. We'll talk to you about what we've been doing with kind of Inside Money Trader, where we are there. And I'm going to hit you with some my top watch stocks, merge with some big money flow. So I want to switch to a 1 minute chart. 1 day, 1 minute, 1 day, 1 minute. And on the top, I'm going to use S&P futures /ES. And on the bottom, we're going to look at the VIX futures. All right. And this is the August future trading $20.70. And what I want to focus in on is trading today. All right. So we're going to go from, let's do 8 o'clock, 8:01. That was yesterday. I want to do, because these trade from 3 o'clock in the morning on. Let's do from like 6 o'clock in the morning on. And here is 6 o'clock in the morning on. There we go. All right. And what I want you to pay attention to is this period right here when the market was kind of up, rallying, looked like maybe it wasn't going to sell off. And then look at the move that you get in the VIX futures. They never, they open on the lows, have been slowly rallying all day. I could build on that. Yes, I did. All right. They opened on the lows and have been slowly rallying all day. And that kind of gave you a sign that, hey, maybe there's a leg down. Then we start seeing the move in ARC. We'll take that from 8 o'clock this morning as well. And again, you can see ARC really started falling. The S&P was holding up, and then it just kind of lost it here. So we're trading 42.82 in the S&P futures, which equates to what? 42.80 in the SPX. Small premium to cash, SPX to future. So I had somebody ask me, and this was an important question. They said, Mark, hey, in Profit Revolution Lifetime, you gave us the 21-20 put spread. And we took off some for a nice profit yesterday, and you're telling us to sell it. I sold just the 21 put at 90 cents. Should I just stay short the 20s? And the answer is no. Never take a VIX option into expiration. I've seen a VIX options expiration print $2 away on the downside on an opening print. So we closed, this was crazy. We closed like 10.30 in the VIX. This was about 5 years ago. We closed 10.30. Remember that real low vol period we had? And then the print was $8.99, $2.31. And on the upside, I can remember a time where VIX had closed the day about 45 and settled at 67. So never take VIX options that are short into expiration. All right, rule 1. All right, now. Oh, this Carly Simon total consignment? Yeah. All right. So now that we've kind of gotten VIX out of the way, let's talk some big money flow. And I got a couple of fun ones. This was one, we actually talked about this one yesterday. So I want to look at a trade in Twitter from yesterday. And I'm telling you, Twitter is going higher. Twitter is going higher. And you're saying, Mark, how in the world do you know that? What makes you the Twitter sayer? And the answer is, I don't know, and I'm not. But what I do know is that we had a trader that was long the October 42 calls, sell them 7,600 times. And against that, he bought, or she bought 15,200, 7,600 by 15,200 of the 49 calls. So let me show you how this works. And I can tell you when they bought if you want to see. So watch this. So we go to October, we go to those 42 calls. You can see the open interest is down. So they put these on for about $1, for about $2.40 on the 14th. All right, I'll give you the exact price here. Watch this. So this is July 14th. A customer buys Twitter October 42 calls in bulk. I'm going to have to find the order. There you go. 248. Might have been done, you know what? They had done it small as a one by two up here. Do we have more of it? Oh, maybe this whole thing was a close. So they bought the 42s, and I can see all these orders. Let me see what the open interest looks like on the OC 40. So there's still a bunch open. So they did 15,000 on the 14th. 15, and the open interest dropped from 17,000 to about 10,000. So they certainly closed some. But we had a trader that had done the October 42, 49 1x2, similar to what I saw on ATVI last week, and they took it off for a huge profit. And now, the question is, what's the next move? So if I was long Twitter, now that I've kind of figured this out, this is why I do a deep dive when I see flow, because I want to know the whole story. So now, if I was long Twitter and I just seen this trader that had made a ton of money on this 1x2, taking some money off the table, it's going to make me think, maybe I should take some money off the table. Kind of an interesting approach. But Twitter has been really all over the place. It's been a mover and a shaker. And so there's that. And now let's dig in a little more and see if we can find some other kind of interesting flow from today. Showed you ICLN yesterday. You guys remember those ICLN puts? Trader bought in ICLN. The September 22 puts for 50 cents. You can see those 19,000, they're all open now. Here's a question. Why are you buying the 22s for 50 when you could maybe buy the 23s for 85 cents. You're actually going to make more, I think, on the 23s than the 22s. So if I was going to piggyback, I buy the 23s. So kind of interesting stuff. The second trade, and we talked about PCG yesterday. I want to talk a little bit about what's going on in Claris Group, because we continue to see just money all over the place in Claris. So let's go to, and this money started weeks ago into this move, through earnings, through the whole 9 yards. Kind of an interesting one yesterday. We had a trader, we had a close and roll of the Dees 20s to the Nove 20s. They sold Dees, bought Nove, and went long. We also saw, this was interesting, the first time I've ever seen a buyer of puts in CLAR kind of ever. Buyer of the 25-30 call spread. You got some 15 calls being sold in December. Some more October puts kind of starting to trade a little bit. Those are probably a sale. And then just money coming off the table. Now, if you're a member of Profit Revolution, you are long the August 22 calls in Claris still, along with some September 30s. You're long the August 22 calls. We bought these, and this was something I saw as a big money flow, an inside money trade, before we'd launched Inside Money Trader. And so I built this within Profit Revolution. We bought the August 22 calls for 85 cents. And we are riding these higher because the stock does not want to drop. But we are running now a trailing stop. I started my trailing stop at $3.50 on Friday. I raised it to $4 yesterday. Now my trailing stop is at $4.50. And we will see where this sucker goes over the next day or two, when we will obviously close this probably tomorrow or Thursday at the latest. But we will 100% take some of those profits. You know, I got my traders into the September 30 calls. They were $1. They're now $2. So we are going to continue to roll long in Claris. The other trade, this was kind of a riff, if you will, is they bought a bunch of them. Bought the October 25, 35, 40 call butterfly, and they paid, I want to say $2.20. It's up to $3. So Claris has been the gift that keeps on giving. And I think that is going to continue. So I'm loving it. All right, so now let's talk Inside Money Trader. Now, you heard me mention a couple of trades. Our first trade was in PBR. We closed half of it up 41%, a quarter up 100%, and another piece up 186%. We've now closed Ford up 57%, and we closed the balance today at $1.17. These were a nice trade. We're down a little bit on MPW, not very much, but we are. And then the trade I put on last week was in Activision, and you know, I pointed out an Activision trade here, I believe, in Profit Takeover, and we took advantage of that. And in ATVI, we continue to see traders making some bets that a deal is going to get done. Seeing some of that today. The Jan 85-95 call spread going up versus the 60 puts. It looks like they sold put, bought call, sold call, traded stock. So we continue to see that kind of bullish activity. I'm telling you, I think some sort of deal is going to get done in Activision. Through tomorrow at 3 p.m., you can join for a month for $49. And this is going to be, 8 to 10 trades, a live session with me, daily live sessions with Brian King if you're not. And every trade has a video update. So there is lots to take advantage of within this. And again, $49. Seriously. What's going to happen? Come on. Join us, and I'm looking forward to it. All right. Let's dig into my top watch stocks. And we're going to start with ARK funds and what we're seeing there. And I told you, this sucker at the top of the show, leading us lower, maybe a potential momentum shift. I have some short August on. I also have some short September. I'm looking for this one potentially dial back as the day progresses. The second stock I'm watching is obviously Apple, because as Apple goes, so goes the market. We talked about that ARK momentum shift. Line. We talked about that ARK momentum shift. I mean, it is crazy. The relationship between S&P futures and Apple. Just go to 8 o'clock. That. I mean, the two, Apple is the market, folks. What it comes down to. You want to know whether the S&P is going to continue to rally, watch for weakness in Apple. It is actually, I believe, leading the S&P, and you will want to watch Apple. When Apple gets soft, the market's going to get soft. When Apple gets stronger, the market's going to go up. It is the market, folks. All right, let me see if I can find kind of another big money name I'm watching out of Big Money Flow. And hey, some TQQ puts going up for some size this morning, folks. Uber, September 26 puts being purchased this morning. Got a Nikola roll. Nothing really big on the individual equity side, except for some ICLN puts tied to stock. And here's one, Affirm. Down 2% today. And this is a bold move. The 38 calls bought for $1.41, expiring on Friday. Looking for momentum to shift back the other way. Kind of interesting. And I would note that we're down 11, and UVIX is not at the high of the day anymore. So I don't know what kind of sell-off we're going to see. It doesn't feel like it's going to be 30 points. I think we're talking 15, maybe 20. But Affirm, we do have some call buyers coming in looking for a quick move into Friday's expiration. So keep an eye on Affirm. And I am still watching ICLN. And I broke this one down yesterday. it broke into kind of way up into here. And a trader buying the 22 put is looking for it to kind of merge back with its 200-day moving average. And so that is another name that we may go into some of the EV space or somewhere within that, and not ICLN itself. But that is a big name that we're kind of seeing some flow on. And folks, that is kind of the big trades that I'm seeing across the board. Am I still holding SLV? I am. Because the money flow is telling me hang on to SLV. In SLV, I am long extremely long dated calls. I believe out to October or November. And so I did that on purpose because it gives me plenty of time for SLV to make a recovery, because SLV is a little bit tied to the hip at UUP. Now, we've been seeing a structural sell-off in the dollar. Maybe broke out today, but I'm looking for it to at least move back to 50-day moving average. SLV what calls? That is for inside money traders to know and for you to find out for $49. But I'm really looking forward to what I'm going to come up with in Inside Money Trader, because we've just seen a cacophony of order flow pushing things around. Here's one that just crossed the tape. In Charge Point, trading 1806. We got an August 17.5 call seller, sold 20,000 of them. And then they went out a week and they bought the 18.5s. So they're looking for momentum moves. How are my inside money trades doing? I think pretty darn well. Which way do I see ARK going? I think ARK's going lower.
Actually, we do have a report on your inside money trades, Mark. You want to check it out? We do have...
Yeah, no. Put them, yeah, sure.
Yeah, let's do that.
There we have it. This is everything open and closed from a couple days ago. How about X? I've not seen any big trades over the last couple days in U.S. steel. It is one that I am kind of watching. Here's one. We put this on yesterday in Profit Revolution. Keep an eye on GlaxoSmithKline. They've got a lot of problems because of what we've seen with Zantac, but just a ton of put selling and call buying in this one. People looking for a quick turnaround. All right. 4 of 5 closed for winners, 3 of 4 open positions currently profitable. There you have it. The inside money doesn't lie. All right. If you know what you're doing and you can sniff them out, you will be happy. All right, folks. Kind of my watch list. Gave you some big money flow things. Gave you some different ideas. We talked. Keep an eye on GlaxoSmithKline. Keep an eye on ARK. I think it's going to 47. And keep an eye on Charge Point, because there is a potential, maybe after today, we'll take a breather. There's potential breakout move tomorrow or early next week. It is 9:59 my time, 10:59 Eastern time. I am about out of time. And so I am going to, short BBY? Yeah, absolutely. Absolutely, but you got to know how to do it. Profit Revolution, folks, I'll show you how to build a BBY spread that you can take advantage of at 2 o'clock today, at 2:15 today. So we'll spend a little time looking at BBY, folks. So don't worry, up $5. Absolutely silly. All right, folks. I hope you guys have a great rest of your day. For Amin, my former favorite broadcaster, I am Mark Sebastian, your only option. And I hope you have a great day.
Good morning. Come on in. It's a great big world and it's time to begin.
Biggest financial crises it's ever seen, but that created an opportunity for trades. And Garrett says it's happening again. This Thursday during Midday Momentum, we're going to be talking about what Garrett is calling the biggest short of his career. You cannot afford to miss this event. Garrett is going to be setting up this trade and explaining why he thinks this trade will be one of the most beneficial trades you will ever see during your entire life. You have got to get in on this thing. Go ahead and click here on the screen to get this thing added to your calendar. We will see you this Thursday during Midday Momentum. Go ahead, click here. We'll see you soon.
Good morning, good evening, and good afternoon, everybody. Hope everybody is having a great Taco Tuesday. It is time for the one, the only Solid Jello. Let's get it started in 5, 4, 3, 2.
Oh, hey, look, there I am. What is up? What is up? What is up, VWAPians? Good. Oh, it's morning. I'm normally here at noon. And by the way, hi, I'm Solid Jello. If we haven't met before, nice to meet you. This is where we're going to go over how to build out technicals, where to line draw, why the market works. So any questions you got, please put them in the chat room. And if I could get some SJLOs in here to let me know you're alive and breathing, that would be awesome. What is up? What is up? What is up? There we go. Look at the chat roll. Bang, 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 bang. Pretty cool. Pretty cool. Thank you for all the love. I just posted a chart now that we scrolled through the chat room here. But up above, I posted a chart of the queues, and there's a couple of orange lines on those. Those orange lines are our very pertinent and important registrations for today on the queues. And I'm going to go here and show you live in a minute why those lines are so important. Let me come over here real quick, refresh the chat room over on this side and make sure that side's working, because listen, without your feedback, I don't know. I mean, I could talk for days about anything, but our goal together is for you to provide feedback in these chat rooms and say, hey, how does this work? How does that work? I go through and I capture those questions and try to present them the next time we talk. So public service announcement right there. Jello shots. Yes. Ohio Steelers. They're, thank you for bringing that up. These guys here at Money Map have been so awesome. They created my own little replay section, which is basically Jello shots. It captures all of the independent videos that we've done together, or, sessions, and you can go back and review them. In the near future, I do intend on creating some very short little snippets called Jello shots. So hopefully, we'll get around to doing that. Schedules are just nuts. So, but, oh, hey, thanks for pasting the links there, Ryan. Right on. Thank you. All right, there we go. Let's see what the first question is here. Then we'll get into the meat of our discussion. Solid, I need help with the chart. I have done everything you said in previous videos. I don't have same screen setup as yours with options or buying and selling buttons. Mark, there are, I think if you have the general setup, if you've worked with me in the past, then we probably have to have a powwow and get that figured out. But setting up your different layouts and the way that option world is configured, it's not that big of a deal. We'll take a second here and go over it and look at it. Penske, solid. I need you to go back on how to add the VWAP scan in TOS. Are you talking about the custom column? Now, don't forget, some of this stuff's proprietary to what I offer. I have my own little side gig where I do private boot camps and stuff like that. But I have offered up, and there should be a link to kind of a special tools codes page on different things. So we'll address that. And Obi-Wan, I don't use Active Trader. I initiate my orders right from the level 2. You click here, boom, the order box comes up and you hit send. So I keep it simple, stupid. Let's look at Trade World. Matter of fact, I was thinking earlier, what do I want to talk about today? And I guess the stars have aligned properly to go in that direction anyway, which is how to convert, and we'll make it all work together. So what I was going to do is I wanted to really touch base on how to convert common stock prices into what option prices would be. Because the first thing you got to do is be able to master how to read the tea leaves on the chart. And then you can convert that into actionable option prices where you have very dedicated levels and ranges defined. And then be able to go in and say, okay, if the price gets here, what's the value of said contract going to be worth? So if in this situation, this is a good opportunity because we're kind of right at an even number, 330 here. We're slightly above it, 330.35. But let's say we're going to go with this contract right here. So we're going to be looking at the 330s. But we want to know if the price of the stock goes from 330 to 331, what will the 330 contract be valued at? And the purpose for knowing that is, well, it might only, the contract value might only go up 12 cents. And you're thinking, well, that's cool, but I need to make more than $12. But understanding what each of these levels will garner you allows you to define a multiple on how many contracts you need to buy. With buying options, yeah, they can dissipate relatively quickly, and they actually do, meaning that if you get it wrong, they tend to roll over and then they break down a lot faster. But some of you, some of us, the whole world, for the most part, you come in here, it's not an easy thing to be able to buy 300 shares of 300 shares of a $300 product. That's a little out of some people's wheelhouse. So when we talk about buying options, we need to, learn to really specify being in the money, getting it right, knowing where all of our significant levels are, because not only do we want to know if the price goes from where it's here now up, $1, we also want to know if we made a mistake or the market shifted and it's going against us, where we have to bail out at. Thank you, Elizabeth. All right, let me check the chat rooms here, and we'll get down to the nuts and bolts of it all. "65 steps to the multi-AVY." Look, all right. By the way, this will be in the replay. So later, if you miss something I'm about to say, it'll be in one of the replay, or it'll be in the replay for today, the 8:16 session. All right. That link that Elizabeth posted has a bunch of information on how to install some of these little tools and things. Your main one you're going to be looking for is, I think it's called Kenny's layout link. And I'm just going to show you on the screen here what you're going to do, and then you have to go find it and just follow the motion. So if you're having trouble getting your multi-day set up, and most of this is all designed for Thinkorswim, we really don't have a dedicated solution for anything else at this point, because Thinkorswim offers a set number of ECNs or market makers that provides a very specific amount, which is a lot of volume and market data to derive some of these custom tools. So take that on face value. So what you're going to do, and this part right here is going to define really quickly what you want to do to install your VWAP. So you're going to go to that PDF. You're going to go find out where it says, you know, Kenny's layout or multi-day link or whatever. And it's going to be a TOS link, right? It's going to be tos.mx./AXYZ, whatever. So you're going to go find that link and you're going to copy it. Then you're going to come back to your Thinkorswim platform. You're going to come up to Setup on the top right. You're going to click on Open Shared Item. And in this shared item URL box, you're going to put your cursor in there, and you are going to Control Victor, Control V, or Command V. You can't right click and paste. You have to hold down Control, hit V, and then once that's, you'll see the link show up in there. Then you'll click on Preview. Then you'll click on this checkbox in the bottom left here that says Open Shared Item after I press Import. Then you'll click Import, and then that layout window will pop up, and you'll be able to, you know, dance around within that layout. All right, so over to the other thing. Just like we were talking about a minute ago, I know we're kind of, there's so much we need to discuss and get it all done within a half hour. It's crazy. But what we're going to do is we're going to determine the price values of options, and this is going to bring up a quick tutorial on how to lay out Options World or Trade World when we get there. But what we were just talking about here, we were initially looking at the $330 idea, $330 idea here on the Qs, and transpose that into what would that value be if it upticked or downticked, and convert that into an option price. So we've got our levels laid out here. And when we go into Option World, which is going up to your Trade tab, and make sure you're on all products. And then, by the way, when you're on your main chart, make sure you have it linked. You see this little link icon to the right of where you type in the ticker symbol? There's a little link icon there, and just pick a number, 1 through 9. It doesn't matter, just except 7. You can't use 7, and I'll explain why here in a minute. But pick a number. And then when you go to Trade World, also link Trade World here under all products. So you Trade tab. I call this Trade World or Option World. Where the ticker symbol is, also link that to the same number that you used on your main chart. That way, when you're like, oh, hey, look, I'm looking at XYZ here. And, oh, what are the options? And you just click on your Trade tab, it'll automatically load up the option chain for that same ticker symbol. And you don't have to come in here and type in what symbol you're looking for. Because, seconds matter. Like when you're trying to get an idea together, 1, 2, 3, 5 seconds of doing this and this and this, I missed something. And we don't want to miss anything. We want to be on point as often as possible. So I understand my trade world, my option world looks a little bit different. Now, probably you guys are seeing something like this. Oh, I go to Trade World. Okay, here's option chain. And then, okay, for this name, Here's the weekly or, intraday contract or whatever you're looking at. You're like, but I don't have charts in here either. Well, there's a thing here called Trade Grid. If you click on Trade Grid, you notice that for most people who haven't used or set this up yet, when you click on Trade Grid and open that tab up, you got about 3 windows side by side right here. So what I've done is I've gone on the same row that says Trade Grid. I go all the way to the far right of that to where the little cell grouping boxes are over here. I'll click on that, open that up, and then I choose a 2x2 kind of layout. 2 across, 2 down, so a total of 4. And why I've done that is that gives me the opportunity to load up a chart over here with the common stock, and then be able to load the strike price chart over here, and then have the level 2 for the common stock here and the level 2 for whatever strike price I choose. Now, you also, when you set this up, you need to come over here and play around, and you'll figure it out. We'll talk about it some more when we get together the next time. But the idea here is to be able to configure this little 4-group layout into a chart on the top left, a level 2 at the bottom, a chart on the top right, and a level 2 for that chart on the bottom on the right. Now, remember I was just saying something about don't use number 7? Well, for whatever reason, Thinkorswim has, bestowed upon the universe number 7 links exclusively to your little trade icons here. So to the right of each of your bid and ask prices, there's a little tiny letter, and that letter is designated or targeted to the trade grid, and the trade grid designation is number 7. I don't know why. If you really want to know why, get some guru from Thinkorswim on the phone and figure it out, but just take it and just do it. So when I click on one of these little letters here for the strike price we're talking about, in this case, a minute ago, we were talking about the 330, and we're already at 331. So when we click on that little letter, and they're going to switch, the letters don't matter. They're just sort of a keep tabs on this price at this time thing. It doesn't make sense. It'll switch between T and N or Q and A or whatever. But when we click on these little letters, watch what happens up here on my chart. I'm going to switch from the 330 to the 331, and it programs in to that chart the 331 call for this strike price. Over here, it also updates the level 2. So over here, when you set this up, you want to set this left window up here to the same number as your targeted ticker symbol, and then also the level 2 to the same link symbol. But over here, you want to make this chart and this level 2 link to number 7. That's 8. Wait, I can't count. That's 7. So you want these two over here to be linked to number 7. And that allows you to come over here and click on the various strike chain elements, and it will load those into that chart window. Now, I got to make this clear. When you're loading in a chart over here to observe, do not, I repeat, do not ever trade options while only staring at the option chain chart, because the price action that goes off on your common stock gets converted into an option price value, and then it's reported to the chart. What does that mean? That means that this has latent data. Even though right now this chart, oh look, it's breaking ranges and it looks like it's going to go higher on the option chart. But anything could jump off on your main chart, your common stock, and change this disposition, and you will get the message late. You're sitting here thinking, oh, yeah, buddy, it's breaking VWAP or it's breaking a range. Here we go. We're going to break out to another 40 cents here anytime. And it very well might. But if you don't see what's happening over here, watch, look, the Qs right now, they're pulling back a little bit, but this value right here is still maintaining a positive upward trajectory. But if this has a quick pullback, you won't see that move over on your option chart until after the fact. So always be watching your main charts for your direction and how you're managing your option trade. All right, so we kind of talked about how to configure this a little bit. Now let's come over here and dial in some price action. We're just cramming it all in there at one time today. So I had posted those charts earlier. If you scroll up in the chat, you'll see that I posted a chart earlier with a couple of orange lines on them. Those are our dominant ranges for the day. And look where we just got to, 331.58. When we were talking about this, theoretical trade a minute ago, we were basically at 330.12, 330.30, and then we graduated up to 331. So let's say we're there now and we're thinking short and we're going to go back to 330. Well, what we can do is say, I know I have a dominant support or resistance level, and I want to know if this breaks down from here, where's it going to go next? And then we can take that and discover what the value of that contract will be if it gets to that next dedicated level. In this case, it looks like we got through the VWAP, and if you've watched anything that I've ever taught you, you understand when something breaks VWAP, give it a minute because it's going to pull back. It might be a shallow cut, but everything that breaks VWAP or one of these dedicated levels is going to have a moment of retracement because that's profit taking. The algorithms take prices from one range to the next, take profits, decide if they're going to firm up, and then they take the price higher or lower depending on the environment we're in. So let's do a quick, we only got a few more minutes here. Let's do just a quick analysis of determining price value relative to stock chart price value. So here we are at 331.40. Let's go and talk about the 331, and let's just assume it's going to roll over. All right, it's probably not, but we'll go to the south side, and then if we have a minute, we'll go to the north side. So we're going to go with the 331 put. We're going to dial up that contract by clicking on either the bid or the ask price. So, I mean, obviously, if you click on the bid, you're going to be creating a sell order. If you click on the offer, you're going to be creating a buy order. All right. But for what we need to practice here and understand, it really doesn't matter. So because we're buying a put, we expect the price to drop. So the current price of the 331 put is $1.85. And we want to know what its value will be if we get it back to VWAP down here at 330.95. So we'll uptick the value of the contract in your order box here, and then there's a calculator down here that explains where the price value should be. So we're thinking 330.95. So we want this number down here to be 330.95. So buying a put means the stock's going to go down. We'll uptick the value of the contract till that calculator price at the bottom there says 330.95. And we can see the value of that contract, if we paid, what was it, $1.80, would now be $2.05. Is that what we had? Was it? Where's it at? It's $1.80. Yeah, $1.85. All right, so we're thinking this contract will uptick by about 20 cents if we get that actual drawdown. Understanding what that value would be is going to allow you to size appropriately for how many contracts you should buy. So if you know you're going to get a 20-cent uptick here on one contract, well, then you can buy 5 contracts at a 20-cent move. On those 5 contracts will give you a Benjamin Franklin or a $100 bill. So I think we're going to get a good, we got time here to kind of monitor this and watch it for a second. Looks like we're going to drop here a little bit. So let's see if our calculations are going to give us the appropriate uptick we're expecting. And another way you can do this is be able to measure okay, here's the stock here, and it looks like it's going to drop by, what is this, 40 cents, right? And understanding your delta, your Greek, knowing that, hey, if this stock moves $1 from where it is now, my delta is telling me how much that's going to graduate. So if I know that a $1 move on the chart is going to garner me my delta, then if you know, well, this looks like it's only going to move 40 cents, then you could just turn around and say, I know, let's just say 50 cents. You're able to say, well, if the stock's going to move $1 and get me my 80-cent delta, what if the stock chart is telling me it's only going to move 40 or 50 cents? Well, then you could kind of do your math and say, well, if my delta is 80 cents, if the stock moves $1, if the current range to range, breakout is only worth, 50 cents, well, that's only going to garner me half of that delta. Does that make sense? Pause, rewind, hear what I said. I'll repeat it again. Let's just keep it simple. If your delta on any stock or option is $1, that means if the stock moves from, 330.50 to 331.50, the stock elevates a whole dollar, you will garner the delta value on that option contract. So if you're seeing a setup on your chart here that says, well, I understand my delta will get me $1, but right here, this range is only good for 20 cents. So that means the stock price is only going to move 20 cents. That's a fifth of your delta, right? So if you want to achieve that same $1 delta, you've got to buy 5 contracts, right? And our whole goal here is to make that $100 bill. After you're done learning how to make that $100 bill, you can add exponents and put on more size and buy more shares or whatever. Our objective here is to get you on a path where you can create a trading strategy that's at very least going to get you to stop losing money. And then take those principles and that discipline and apply that to making money. So if you throw the number up, because that's why we're here, you want to learn more, you want some more in-depth knowledge on how some of these tools work, how to become a smarter trader. You're already smart by being here because you've already decided this path. I want to take and learn how to take a small amount of money and turn it into a slightly larger amount of money. And that's our only goal, is to help you succeed at doing that. And this is the only place on earth you're going to learn to do this effectively, without guessing, without throwing darts, without having to rely on somebody's greatest next idea to hopefully make you money. Your job is to learn how to evaluate ideas, find ideas, determine their values, and execute against what you have become to learn as a proficient, systematic approach with discipline to make money. That's what it takes. And come join us in the Warlocks world. Call the number, get someone on the phone and say, here's my circumstances. This is what I got to do or can only do. Or just call somebody, get them on the phone and say, hey, sign me up. I want to learn more. This is the only place I've ever seen that actually has taught me something about this crazy world of investing and trading. All right. Thank you guys for allowing me to spend some time with you this morning. I look forward to seeing you. I'll be back here Wednesday, Thursdays, and Fridays now. So you guys have a great rest of your day. Go back and rewatch some of those videos. The link to my replays will be somewhere in the chat. And as always, don't forget to thank the universe for all your good fortunes, and don't forget to squeeze someone you love. I love you, and we'll see you next time.
If you've watched Monday Morning Live long, you've seen Garrett Baldwin. And you know when Garrett talks, you listen, because he knows what he's talking about. In 2008 and 9, our country experienced one of the biggest financial crises it's ever seen. but that created an opportunity for trades. And Garrett says it's happening again. This Thursday during Midday Momentum, we're going to be talking about what Garrett is calling the biggest short of his career. You cannot afford to miss this event. Garrett is going to be setting up this trade and explaining why he thinks this trade will be one of the most beneficial trades you will ever see during your entire life. You have got to get in on this thing. Go ahead and click here on the screen to get this thing added to your calendar. We will see you this Thursday during Midday Momentum. Go ahead, click here. We'll see you soon.
This morning, a lot of craziness is going on in the markets, and we're going to find a way on how do we prosper through the ups and downs of trading. Put a 7 in the chat if you're happy to be here, and do me a favor, say this with me: mindset, multiplication, and management. It's the M3 blueprint strategy. My name is Coach Brian King. If this is the first time that you've heard about me, I teach with the Profit Revolution, the Warlocks World, and a program that I have coming out as well that's going to help traders get the foundations of day trading. And I'm talking about an institution.
And we are going live with Nick Black in 5, 4, 3, 2.
Pew, 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 pew. And you used your creepiest "we're going live" voice.
No, that was my semi-sick, semi-nervous that
Man.
Nick's going to be late voice. Don't give me no crap.
If you pulled up in a van and you were like, "Hey kids, we're going live. Get in the van." No one's getting in that
They
van.
would get in the
bro.
van. No, they would
No
all
one's
get in the
getting-
van because I'm so kind.
You would
know,
say,
it's like,
"Hey, we've got candy and puppies in the back. Never mind that I spray painted over the windows in my camper van. Who wants in? It's the Miley Cyrus tour bus. Who wants in?
Okay.
No one.
Okay.
No one.
Okay. Yeah. Oh my gosh, Nick. Hey,
How's
how's
that
your computer doing, by the way? Hey, how's your Mac?
Lesson
how's your
learned.
Macintosh doing? How's
Lesson
it
learned.
going?
When it says do your updates in a timely manner, do them or it will do it on its own. In its own timely manner. You know, you just click the box that says, "Oh, do it later." It'll do it later.
Yeah. You did.
Later it is.
You can't do it later, ever.
Nope.
Always do it now. Always
So-
do it now.
Crypto world. What's going on, crypto world? Welcome to our show. Welcome to, well, Monday Morning Live and American Institute for Cryptocurrency Investors and all of the fun stuff. We're going to be talking about selling stuff, managing stuff, linking stuff, updates on stuff, and maybe some digital heavyweight stuff. Did I cover all the stuff? Did we nail it?
Sounds like a lot of stuff. I mean, we should cover some ENS stuff, but I guess we won't do that today. Maybe next time.
You mean spammy dumpster fire, garbage, weed to tourist stuff?
Nothing but net. ENS.
Nothing
baby.
but nothing.
ENS.
You're selling
Hey.
dirt tickets.
Hey, tell me what's going on in the market right now. What are we looking at? What do you think about the ups and downs, the stabilization? How are things
Okay, real
looking
quick.
with the coins?
What are you going to do with your ETH going into the merge, 15th and 16th?
Oh crap, dude. Okay, so here's the thing. Okay, so this is crazy. Okay, so I don't know. I actually sold all my ETH this morning.
What?
I sold all my ETH this morning just because Garrett bought Bitcoin yesterday. He said that usually signals a top, and I trust him. So
we love
I
Garrett.
sold
We
all
love
my ETH
Garrett,
this
but
morning.
we love Garrett, but he's not. He's about as accurate as Mark Cuban is when it comes to buying crypto.
Oh, jeez. So I'm going to hold and then I'm going to hold. So I will flip it for 3 days. I'm going to hold this. This is my short. This is my way of doing a short, right? This is I sell. I don't buy shorts. I sell my ETH and then I'll buy back lower, hopefully in 3 days, and then I'll hold up till the merge.
Wait. In 3 days, what's going to happen in 3 days?
The weekend run up, dude. That's it.
Tuesday.
Hey, that's why I said 3 days. Tuesday, Wednesday, Thursday. Prepare Thursday for the weekend run up. Gosh dang it, Nick.
Your plan is to randomly, a month before the biggest event in Ethereum history, is to sell to harvest what?
What?
Did you read some?
$22? Yeah.
Here's what you did.
I'm broke.
Here's what you did. I'll tell you guys what he did. He read some nonsense on Twitter because he lives on Twitter. He read some nonsense technical analysis that Ethereum's going way down this week, just randomly this week. Now, if they were to announce that they're kicking the merge down the road, you would be luckily correct.
Then I win. They're not kicking the merge.
Yeah.
I actually don't think they're kicking the merge. I think they're going to hold that date. That's my personal opinion.
And the merge is the 15th to 16th. That's the transition from Ethereum from proof of work to proof of stake. And I think there's a lot of ways to play it. Selling your Ethereum's one way, but you wouldn't get let me ask you this. What are you going to do on the eve of the merge? Are you going to sell your Ethereum?
See, that's a tougher question. So here's the thing. There's no real upside to holding over the merge, in my opinion.
You look like the Rain Man, except for the stake token that you get for free. I mean, the proof of work token, the ETHW, all those free tokens you get 1 for 1.
Is that worth it though? I mean,
it's trading it's about $80 a token right now.
Is it?
If you had 20 or 30 ETH, that'd be a couple grand.
You're gambling on that it's not going to go down that much after the merge, after they realize that that's not actually going to save gas money.
It depends where it is. If Ethereum's at 2K or 1,800, 1,900, nah. But if Ethereum was at 3,500, approaching the all-time highs, 4,900, then you have a different story. Then maybe it would back off. We don't know where it's going to be in a month, but I'm imagining in a month it's going to be higher than it is now because you're going to have that run up in stupid enthusiasm.
Why don't you ask me the night of? We'll make some plans. Yeah, it's hyped. It's called hyped FOMO enthusiasm. It's hyped FOMO enthusiasm. It's
irrational exuberance. Wasn't that what Alan Greenspan said when he wasn't talking about equities, but all those dummies thought he was?
Mm-hmm.
You're nodding like you have any idea what I'm saying.
Mm-hmm. Who's Alan?
I don't even know who Alan Greenspan is.
Is he? That's my uncle.
Alan Greenspan. Didn't he work at the Buick dealership?
Hey, ask me the night of the merge, because as things go up to the merge, things are going to get more fast, and we can see the trends a little bit more. Obviously, like you're saying, if we see a huge run up, I'm for sure selling the night of the merge, and I'll wait like a few days for things to settle because this could be an easy sell the event.
There's other ways to play that though that would cost you less.
What?
Well, if you bought Ethereum at 1,000 and it went to 3,000, of that 2,000, you're going to give about 30% of that back with a tax moment if you sell your Ethereum.
True.
For those of you that pay taxes. And there might be other ways to do it. If you're going to get if you're going to get the proof of work token, there's ways to play that. There's ways to play options around it. There's all sorts of shenaniganery you could do.
You could do shenaniganery. You can buy ENS names.
No. You'll go
I'll play it straight up.
Sell the merge.ens.
And then I'll flip it for 20 times my money.
All right, let's look at the markets really quick.
Register it right now. Sell the merge.
What's interesting?
I love it.
Sell the merge.ens. Nothing's all that exciting right now. We had a pretty kind of up weekend. We're still up. Look at the 30-day. Pretty much everything's green on the 30-day except ARweave and, well, Looks token. If Looks gets down to 28, 29 cents, might be a quick trade because it always bumps up based on nothing and comes right back down based on the reality that no one's using it. So, but that's a lottery ticket. That'd be a tiny, tiny, tiny play and it'd be incredibly risky. So I would not recommend doing it, but you could do it. I will not do it, but I have seen people playing that kind of wobbly, say 28 to say 45 cent range for looks. But that is complete degenerate gambling, no different than Vegas, because there's not a lot of use, utility, and certainly not a lot of adoption with looks rare. Are you seeing is anybody using looks rare, Ryan? I mean, Ryan, you're not
brutal.
Ryan.
That,
you
that
own
was a brutal
crypto.
take. But listen,
You own crypto.
Do I though? But do I? So
I mean, do you see any?
Nobody's using NFTs at all right now. Nobody.
Yeah.
And so
it's quiet.
It's a silent marketplace. I would not be looking at looks right now, personally.
If you're looking at Ethereum as a gauge and you're seeing all the fees coming down, you're like, look at all these upgrades are working. No, this is because no one's really trading Ethereum right now in the NFT space. And that was the bulk of the activity. But what that shows you is if a bunch of people were leveraging Ethereum, it has this fee paradox where the more people use it, the price goes up. The higher the price goes, the more the fee goes up. And they're like, well, all this will be resolved. Yeah, in a couple years, but not right now, because it still has this problem of it's a Cessna and it's flying, and in midair, what they want to do in this whole transition process is put jets on it, change out the cockpit, they want to change everything on the jet while it's in flight. It's very risky when you start these crypto assets running, these protocols, and you have these big fanciful ideas. We're going to do this, 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 and this. Sweet. Except once it's running, it's not so easy, because if any part of that piping, any part of that rewiring is wrong, you have the kind of nonsensical, quagmonic, money hoovering up nonsense that you see like on Solana. Because if you build bad tech and roll it out real quick to fleece a bunch of investors, surprise, surprise, when it doesn't work and there's no way to fix it. So I hope that Ethereum gets it right, but a lot of people still believe that the merge is Ethereum 2. It is not. It is, in Vitalik's own words, it is 55% of the way there. It's taken them 6 years to get this far. How long do you think it takes for the other 45%? And when you hear Vitalik making statements like, well, we wouldn't really even need to get to Ethereum 2 as long as layer 2's scaling is successful, that's not what you want to hear. That's a rich guy saying, maybe we don't get all the way, but other companies will help us do the work that we can't necessarily do. Layer 2's. That's, I don't know, man. That doesn't seem like they're super confident.
Motivated.
Yeah, how are you motivated when you have, so much effing money? You wake up, listen, man, you wake up with $300 million in the bank. You have no give-a-ness left in the tank. We know where I'm going with that, right? Ship. You have no more give a ship. I'm all out of give a ship. What's in your pocket? It ain't give a ship. I got nothing left in that pocket. All right. Upgrades for Ethereum.
You said 3 million too. So Vitalik's probably a little more than that.
No, I said 300 million. Did I not?
Oh, you said 300 million? I thought you said 3 million. I'm like, yeah, 300 million. Yeah, you're not going to give anything. So
you care nothing about nothing. You're like,
nothing.
Everybody you know has been locked up in prison. Yeah. They're lighting whole nations on fire. There's an asteroid coming towards Earth. 300 million. I'll buy myself another planet in the solar system and just go inhabit it because 300 million. All right. Cardano, the Vassal hard fork is coming. First of all, it is rolled out on testnet. Everything is fine. It looks like from Charles' words a few days ago, they're going to push that in the next few weeks. Does that moment seem exciting? Probably not. However, it lays the groundwork with a bunch of improvement proposals for Cardano for eventually Hydra and some other really cool things. Hydra, which will allow the stake pools themselves to each handle kind of as a second layer about 1,000 transactions a piece. There's about 3,500 or more stake pools in Cardano. That gives us roughly 3.5 million transactions a second, which is more than currently anywhere on any crypto platform, protocol or otherwise at all. Nothing's even close. So, and the ones that claim they are close, they all break every 7 days. So Polkadot, what's going on there? Well, who knows? One of their did you hear about their stable coin? Not Polkadot stable coin, but a stable coin that's running on Polkadot. Again, a semi-collateralized, semi-algorithmic stable coin. And this is not a Polkadot problem, but the network, the company that's managing this particular asset, they pushed out an upgrade at the wrong time, and they got attacked they started minting tokens so fast. It was like, not only did it depeg, but they printed like they minted 1.2 billion tokens or something ridiculous, just like in a few hours. Crypto ain't easy. Yeah, 1.3 billion. Good one. I'll call it.
This is happening so fast, and this is the biggest problem with the merge coming up. So many of these things are happening. That's why they're like taking their time with the merge, and that's why they've been pushing back, because so many of these hacks happen when they're pushing out these new updates or these new transition things, and it happens, man. Holy crap, that sucks though.
Shiba, the dummy coin of dummies, it's the dumber dummy coin because it's based on another dummy meme coin, and they actually, well, for whatever reason they're pumping, because I guess there's some dummies with like $6 left from their check. They're dumping into Shiba. The people at Shiba are angry that there's people copying them.
Wait, what?
Yeah, there's people trying to copy us. They're trying to copy our code and fork our. You copied. You can't get mad at other people.
Somebody else's contract.
It's like a counterfeiter, and he's like, "There are people counterfeiting my counterfeit bills. Take it as a sign of flattery, good sir." And what a joke. Anyway, Matic still performing very well. Still down on the year. I think what the market's going to take another leg down. I'm not like a pessimist or anything. I still think the MT Gox thing until it's settled. And Bitcoin right now is the ocean. And if the ocean gets plundered, then the rest of the ships on the ocean, they fall. And I think protocol layers you can be investing in. Still with Matic, I still tell people, I'm trying to urge people, if you're up 100%, 80, 75, which you should be if you've been dollar cost averaging, it's okay to take a little off the table right now. We're not out of the woods. We're not in a expansionary phase. So be careful. Don't buy into the hype with Ethereum Classic. This is not likely the token people are going to be mining when Ethereum transitions to proof of stake here in about a month. Ethereum Classic is weak. Their network is weak. Their community is weak. Their developers don't exist. And there's no one is not fair. It might be no one. I don't know that anyone is developing anything on Ethereum Classic at all. You're an Ethereum hack.
No.
What do you think?
No. Nobody uses, nobody talks about, and nobody trades Ethereum Classic. You can't even.
Ashford,
and here's the thing, too.
Ashford said, how do you get out of Ethereum 2? Well, if you're in Ethereum 2 on Coinbase, you switch out of it. If you're in Ethereum 2 somewhere else where you've staked, ain't no getting out. Sorry. Whoops. All right. The only other things I thought were notable, I think it might be time to look at getting back into one. Fetch had kind of a big bump yesterday. It was up about 10% earlier. Fetch is cheap, man. I think, well, cheap is not fair. I think it is fairly discounted based on its value. A lot of times you watch the token goes down, you're like, this thing's over with. It's not over with because the token is down. They didn't build a skyscraper, 99 floors, and on floor number 98, they're like, yeah, you know what? The token's cheap. We're done. Everyone just pack it up. Let's go. Just leave the building dormant. Let's call it a day. No. AGIX got a bump over the weekend. I expect it to get a bump again here in a few days, probably Thursday when they start the AGI conference. For those of you that are interested, it's free. The Singularity Net conference, and you can go for a couple of days to listen to people that are way smarter than any of us collectively will ever be. And hopefully that's some of the many people that will usher in the future of artificial general intelligence and, swarms of AI agents that are a combination of nature, nurture, and self-evolution, and self-fixing, self-editing code and things like that, which would be awesome. We're not there yet. And yes, you can get fetch on Coinbase, but it is the Ethereum-based fetch, not the native fetch, which runs on Cosmos Station. Well, it's a asset under Cosmos, meaning if you wanted to stake it, you would have to transition it to the new token to stake it, which you go across. We have videos for that going across the fetch bridge. Anyway, should we get to some Qs and some As?
Yeah, we got
I do have a
R7
Did
here.
you get-
Check this out. What's up?
Real quick. We have 595 digital heavyweights.
I saw that. That's good. That's really good. So right now, 500. And as soon as it gets to 1,000, you said you're increasing the price. So get to 1,000 digital heavyweights.
Who cares about the price? 1,000 is you're not anyone until you have like a team of 1,000. 1,000 is like, isn't that like a legion or something?
Yeah,
a league.
You can.
I don't know what all those Roman words about militaries are, but you need 1,000.
It's a gaggle of digital heavyweights.
It's not a gaggle.
It's a whole gaggle.
All right, what does R7 have?
So
for us?
R7, he has the BEP coins and struggling to sell them. So how do you sell those BEP coins?
Well, they're Binance, so probably you may be able to swap out of them through MetaMask if MetaMask has support for Binance tokens, which it may or may not. You'd have to look and see what all the different networks are. I'm not even sure. I've never touched any BEP coins. You may look
the only way to swap out of them here. Can I help?
Go ahead.
The only the only way to you have to go to Pancake Swap, and you're gonna have to get it over on a wallet over there, and you're gonna have to go to Pancake swap them over, and send them back to Binance to be able to bridge them back to the correct whatever coin you want to bridge them over to.
Could you switch them out to like USDT or USDC and go from there to like a MetaMask?
Yeah. As long as you go, you still can't go from and I don't know, you still can't go from that network. You still have to use a bridge of some sort to get over to MetaMask because MetaMask is all Ethereum based. So you still have to use the bridge.
Right, but even in
Binance.
MetaMask, you can go check the different networks and they have like Polygon and things like that.
As long as you get it to a correct network that MetaMask accepts, but MetaMask does not do Binance or BNB coins. Anything with a BNB code in it, it won't support it. So you have to bridge over first through Pancake Swap and then back over to BNB, Binance over there on the exchange, and then you can go to MetaMask. So.
And by the way, Joe Rob, we look forward to taking you under our wings. I don't know, man. I think the greater question you should probably ask yourself is why you were buying BEP coins in the first place.
And make sure it's worth it. There's a lot of gas fees that you're going to pay all the way through that whole exchange. So
yeah, if you do all the math and you're going to end up paying $400 to get $600 worth of tokens, maybe you just sit on them.
Yeah, there you go. That's something.
Take a sit.
All right. We got Harmony. All right. So Robert T, does Harmony go away with ETH when it gets proof of stake? Should we sell it?
No. Harmony. Harmony is what I think could eventually be a core asset. It's a lottery ticket right now, but they're getting into the semi-collateralized and uncollateralized lending. That's what the future of kind of digital banking might look like. So I think Harmony, it's a cheap way to get exposure to a potentially great market, because what's going to change the world? It's going to be cool things built on top of these protocols. Harmony, the one token, ONE, is a solid project that I like it. I own it. I have no desire to sell it. I should probably add more here at like 3 cents because I was adding at 20 cents. So I'm actually holding and staking over at KuCoin. They have like a kind of a staking over. It's not staking, but they have a rewards thingy over there at KuCoin that pays you, I don't know, between 4 and 6% annualized. And I have a small bag, a tiny, tiny little holding of it. Nothing dramatic, not even near 1% of my portfolio, but it's a lottery ticket. The company seems okay. And that's what we do with lottery tickets. But Harmony, what their idea is makes sense. And I could see that creating, some utility. Like if I was going to buy a home and I could, borrow against, some crypto in a much better, for instance, on Nexo, you borrow you can get 10 cents on the dollar, right, to borrow. Here, you can get 90 cents on the dollar, depending on how much you have to put up, or 80 cents on the dollar, meaning it's like a more traditional loan structure. So I like Harmony. I like it. But you have to like it. If you don't like it, sell it. All right.
Yeah,
what do we got?
True story. Speaking of KuCoin, they just bought $300,000 worth of .eth names. Just saying. Anyway, so we got Money Moves.
300,000 is nothing for them.
Yeah, but it's something for .eth names.
You know what they're going to do? They're going to give them away.
Also,
they're actually going to destroy your market.
They're not. They fractionalized the EF. No, they've made a fractionalized market for them. They now have a trading fund they're setting up.
You do realize that the ENS, that whole thing is
happening.
Well, it's not happening. It's happening for 6 people on Twitter and a bunch of degenerate gamblers.
Okay. Anyway. Money Moves. Question: what app site do you use to manage your crypto and let you see costs you purchase and things like that, etc.? Basically,
I think you can. There's a variety of them. I mean, I think you can set up on any of these accounts. Like even Live Coin Watch has a portfolio management thing. Most of them have some kind of portfolio management. I use Blockfolio, but I've used it forever, and that lets me enter trades and do all sorts of cool stuff like that, and see, my cost basis and all that. So, yeah, you just got to find what you like. Check out Live Coin Watch. They don't sponsor us or anything. They're just cool to use. Matter of fact, no one sponsors us. We don't have a dang sponsor.
I'll sponsor you.
Oh, really? With what? Your dumb ENS?
Here we go.
It'll be I sponsor Nick.ens.
Let's hit this, and then there's a question in chat that I want to hit too.
Go.
This is R7. If we linked Ledger X with FTX, did that make our Ledger X a margin account? If so, can we unlink it?
Oh, that's tricky. I don't think so. Remember, FTX owns Ledger X. They bought them. However, they don't handle their day-to-day processes. It's still, as far as I understand, still the same team. And Ledger X is a regulated exchange. Ergo, you can't, I don't think that links and creates a margin account. I mean, read the fine print. I have not linked the accounts. And can you unlink? Well, I don't know, but I don't have an FTX account in the first place because I have no desire to have an FTX account. I had a Ledger X account, Ledger X exchange account, and I like Ledger X, the exchange. However, I don't like FTX. I just think the exchange is weak. Their liquidity is weak. Most of what they do is pretty weak.
There's a couple of questions in chat, just live questions. They want to know, and I assume they're getting the WETH rewards, the wrapped ether. They want to know when they should change their wrapped ether into regular ether, or if they should do that at all. What are your thoughts?
I mean, I would probably convert your wrapped ETH into Ethereum in MetaMask and just hold and try to figure out what's going to happen. Or you could put it on an exchange. I don't know, man. It's pretty tricky.
There's no real reason to hold wrapped ether, honestly, unless you're using
unless you're buying NFTs.
Purpose. Yep.
Yeah, unless you're buying something that requires wrapped Ethereum. Otherwise, convert it back. It's incredibly cheap. It's like $1.
It's like 40 cents right now. Like it's super cheap. Gas fees are so low. So yeah, that's easy peasy.
And yeah, for those of you that came to see Brian, he is around. He's just not here this second, but he's somewhere close by.
Warlock's World. Yeah. That's where he's at. Anyway.
Okay. Heavyweights, we'll see you tomorrow. Same bat time. Look at the Discord and the chat. We'll get you the links for that private show. Woo woo. Private dancer? Nope, that's different. And on that note, stay in school. Don't do drugs. Don't do anything that my poor, insolvent, drunk, strung out on meth grandmother or Brandon wouldn't do, which is very little. We will see you tomorrow.
You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair, it's time to sit back and talk to profit. Hey, you talking to the prophet. Hey, you We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them high roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Profit to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the drop. I need some crypto, put it in my pocket. By any means I rock. This is the Profit with Nick Black. It's time
talks about cryptocurrencies as well. That's Tom Gentile. And although that is not going to be the topic of today, we're going to be hanging out with him here in the main room for the next 30 minutes. Let's bring this man in 5, 4, 3, 2.
Hey guys, Tom Gentile. Welcome to Tuesday and what I like to call Stock Options Tuesday or Options Pattern Tuesday. We're going to dive into options trading, volatility, and how my friend Brutus helps us find the best options to trade. And I think I have about a half a dozen to look at before we end the half-hour show. So let's get right to it. Eric, how you doing today?
I'm doing great, Tom. I like this new, faster format. I feel like we're getting so much information really quickly, not wasting any time, not talking about too much casual, just giving ways to make money.
I only hope that everybody can keep up. I try to slow it down, and over the next couple of days, maybe even the next couple of weeks, I'll figure out the flow, and then I'll know just how much I wanted to talk about during that half-hour show. So before we get into Options Tuesday, take a look at this chart. I mentioned this yesterday. This is AutoZone. Get in the zone, AutoZone, and boy, we got the best breakout. I mentioned yesterday. Here's the year-to-date chart. Here's where we started the year, 2100. We tagged this 1750 area a couple of times here in March and in June, back up to 2100. 2100 has gone from a resistance level to a support level. This was a quantum trade, folks. All right. Expensive one, but one nonetheless. And the big breakout, and we were talking about this, that we get out here above 2250. That's exactly what happened yesterday. Here's your yesterday. That 2250 was the low. We jumped up above 2275. Look at this move we got today going on, up 2.5%. I'm in this again. I like to have skin in the game. I like to if I'm putting something out there to you, I give you a head start. I jump in, and this one's been doing pretty well. And again, like I said, it's an expensive trade. Big question you're probably thinking about right now is, where's it going? All right, up 2.5% today. Let me tell you this. When I see a stock like this make a jump like it's doing today, I think it's up like 65 points. If this thing jumps to 2,400 by the end of the week, I got to take half of it off. I got to sell half the shares. And but 2,500, 2,490, 2,500, that's my target. That's my summer target for AZO. And like I mentioned just before, it was a quantum pick. Not the cheapest, but our members get the picks with option trades, with more option trades. This one, I tried to look at an option trade. It just wasn't happening, folks. All right. The options are not as liquid as I like. And so I looked at it and said, I'm buying the stock. So anyway, if you want our best quantum picks, numbers on the screen, and you can call that number to find out more and how to join. Now, let's go ahead and jump forward and let's talk about options. And I want to start off our option trades by talking about what's cheap and what's expensive. Now, a couple of names showed up this morning for me, and I want to share those companies, those stock names, and I want to talk about what's cheap and expensive. So the first one on the screen is Bed Bath & Beyond. This has become a meme. It is decadent. It is a dessert in the meme world. I'm not even quite sure why they're pushing this, but I wasn't sure why they were pushing GameStop last year or AMC. They're pushing it. And so this stock, if you take a look at it, again, I'm going back to November of last year, and we were talking about 26.30. It hit a high of 30 back in March. It came and tried to retest that, got as high as about 28, 29, and then fell apart. Earnings, all right, lower than expected in January, lower than expected in April, lower than expected in July. Yeah, it's missing, and yet this thing came down to below $5 and double bottomed at $5 both at the beginning and the end of July, and it's been on a rampage, and it's gone up. It was $16 a little bit earlier this morning. So when I look at this, I got to think, wow, I mean, let's pull the latest on that one so I can share that with you. And you can see here, again, we're looking at something that is, it's trading just around the $16 mark. That is perfectly fine. If I would run over here and get a real-time quote on BBBY, let's see what that's telling us. Wow, what is going on, Eric?
What's that, Tom?
Man, the difference between what was going on maybe an hour ago and now is it's scary.
Things change minute to minute, Tom. I mean, you know this. So let's go through what's happening right now versus what you saw an hour ago.
And so let me bring up the real-time chart on this one. And I want to talk about the real-time chart with Bed Bath & Beyond. And so here it is. Look what's going on. These memers. I mean, there were some folks in here. I was looking at in one of the chat rooms, the day trading rooms, and they were like, "Oh, short it." And it ran up. And this is a year to date. Let's just look at the daily chart on this one for the day. You can see, it. You're looking at what was going on this morning, 15, 16, 17, and they were trying to short this thing after the first half hour. And I mean, it ran as high as 27.50. I think it's a little bit overdone. I think, and I also believe, guys, this is not the small meme traders playing these games with these stocks anymore. There are hedge funds now that have learned this game, and they're going to push it both ways. That's what I believe is happening here, because you don't get 3 million shares every minute of the day. When you're looking at what's going on here, just between 11:30 and almost 12 o'clock, we were topping 3 million shares a minute on this stock. You don't get that with meme traders. There's got to be some larger actions going on in here. Now, is this stock cheap or expensive? Well, it's a lot more expensive now than it was this morning. The stock's doubled in value in just the last day. All right. But I want to look at another stock, and I want to talk about what I look at as far as cheap or expensive. If we're looking at, say, Bed Bath & Beyond, $26 a share, that might be expensive. Take a look at Keurig Dr. Pepper. Keurig Dr. Pepper is a $39 stock, $40 stock, and it is on the high side of what's been going on for the year. All right, it's got new year-to-date highs happening. It has mixed earnings reports. So that's something to take a look at too. All right, but what is cheap and expensive? Cheap and expensive could be, you take a look at, for instance, this is Bed Bath & Beyond, expensive unto itself. When you take a look at it versus an AutoZone at $2,350 a share, I mean, you're when I bring this up, a lot of people look at that and they get a little bit of deja vu, and they think Amazon, they think Google, because why would a auto parts store have a stock price at $2,350, $2,350 per share? And the thing is that it has been slowly climbing up like this over the past couple of years. Here's the thing. Yes, AutoZone as a stock looks expensive when you compare it to a Bed Bath & Beyond. But I want to look at this a different way. I want to look at a different comparison that we have happening here. And I'm going to try this one more time with KDP, see if we can get KDP to pop up. Here, I'll just move to the other side. Here's what we call our morning report. All right. This is a different way of looking at stocks and looking at whether they're cheap and expensive as an option trader. So when you take a look at a Bed Bath & Beyond, look at the implied volatility that was coming in. This is where option traders look at the greed and the fear of this underlying stock, and they price the options accordingly. Now, what we see is I have a greed fear index, and I have what's called high IV, low IV, and current IV. And when the high IV is at 281, and by the way, take a look at that. And I want to show you something else here. Let's just pop in the VIX, all right? Or how about the VXX? Yeah, let's look at the VIX futures. All right, VIX futures are trading at 2125. This is the volatility index for the S&P 500, okay? So when you see Bed Bath & Beyond's VIX, because that's what we're going to call it, at 281, is it safe to say that it's trading 10 times the volatility of the average of the volatility for the VXX, which is the S&P 500 as a total? Yes, that makes this stock, this $26 stock, expensive in the eyeballs of option traders. See, option traders not just look at what's going on with the stock currently, but they're giving you a perception of what's likely to happen. I looked at Bed Bath & Beyond this morning, and I was trying to sell some premium, and I thought to myself, well, the earnings aren't coming out anytime soon. They just came out recently. Why is the implied volatility? Why is this thing at a 281 right now, and we're nowhere near the next earnings cycle? Because the meme traders are pushing this all over the place. Hedge funds are pushing this all over the place. Large specs are pushing it all over the place. And option traders are getting nervous. And those call and put options are bumping up in value. They're very expensive. My top 10 list of expensive options right now look like this. Bed Bath & Beyond, absolutely number one, right? Now, I have TGT Target coming in as number 2, where it had a range. The expensive range is 55.03. That's the highest we've seen in a year. The lowest we've seen is 18.91. Currently at 55.03, expensive. Peloton, 168 volatility, meaning very, 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 very dicey, moving around like crazy. Option traders are thinking that in the future, this is going to be even more volatile. When you have a 168 on the high side and 49 on the low, and 128 is the current, guess what? It's very, very close to those one-year highs in option premium. That's what this is, guys. Expensive IV. I want you to think of this as expensive option premium. All right. Walmart's up there too. 34.08, 14.79, currently at 31.08. This is expensive. And you got Ross stores on here. You've got Dollar Tree on here. You've got a lot of these stocks are retail stocks. You know why most of these are on here? Because their earnings reports are coming out really soon. And once that unknown becomes known, then you'll see all of these stocks come off this list. Now, let's just take a look at the right-hand side for a few minutes. These on the right-hand side are the cheap implied volatility. That means the option prices are cheap relative to where they've been. For instance, OLN, all right, had a high option volatility high of nearly 81. The low was 36.63. Guess what? That's the current. OLN is currently on its low side of implied volatility right now. So if you like OLN as a bull, then call options might be the way to go. If you like it as a bear, then put options might be the way to go. This particular chart does not tell you the direction of the stock. It tells you whether the options are worth buying or worth selling. This side is the sell side. This side is the buy side. What it will not do is it will not give you direction. It gives us range. All right. So if I'm looking at OLN or I'm looking at CINF, cheap options. Lucid, believe it or not, cheap. Well, they're a little bit expensive, but they're nowhere near where they were just recently because right before their earnings announcement, these options were trading at 141% implied volatility. They're now down to 72.43. So to put that into terms that you and I can understand, recently, Lucid options were twice as expensive as they are now, right? CLF, 82 to 50, current 51. On the low side, the cheapest it's been all year. Look at U.S. Steel, 84, 49, 51, very close to the bottom. All right. Keurig is on here. I just mentioned that one. Keurig Dr. Pepper had a high of 30 and a low of 16 and currently trading just above 17. Vicky's on here. Moderna's on here. WBA. And we round that out with D. All right. Dominion. All of these on the right. If you have a reason that you want to be long or short that stock, call options or put options. Buy as a buyer, make the most sense. On the left-hand side, I'm trying to figure out a way to sell these. Maybe I'm selling with something like iron condors. It's a way of creating a long and short position around the current stock price, looking for a drop in these option premiums to occur. Maybe if it's more of a long-term trade, like if I'm looking at Target and I'm thinking, all right, Target really got hit hard last quarter. maybe they are figuring out a way to fix their problems. Maybe long-term put selling as a way of owning that stock might be the right thing to do. Okay, so I'm just throwing that out there for you folks. But that is what we call cheap and expensive options. And the big question that you should have on your mind right now is, well, does cheap mean it's as low as it's going to go? Does expensive mean it's as high as it's going to go? And the answer is no to both questions. The real option trader looks at these and looks for patterns where they see cheap getting more expensive and they see expensive getting cheap, right? And the area that we have found where we can look at and data mine for those events are what we call trigger events, right? So trigger events tell us when the best time to buy OLN is if we see a volatility surge, or the best time to sell BBBY. I can tell you right now, there is no time to sell BBBY right now because we don't have a trigger event. Not anytime soon. Target's got a trigger event. Peloton's got a trigger event. Walmart's got a trigger event. Ross Stores, Dollar Tree, they all have trigger events. And their trigger events are earnings coming up soon. But you look at Bed Bath & Beyond, which is the highest, most expensive volatility you can see right now. That one to me is a stay out of the way. Stay out of the way. Let the people that need that excitement, that need that greed, let them step in there, all right, and fight that battle. I'm going to hold back. I'm going to be the second regiment on that, all right? I will be next in line, but only if there's a reason to trade Bed Bath & Beyond. Now, if you're a day trader, you probably got to love this. Love it, all right? I'm not a day trader. I am a pattern trader. I am what I like to call a position pattern trader. I need overnight events to happen, okay? I'll give you an example. Yesterday, AZO, when I looked at AutoZone, hey, it was a buy yesterday. It went up, what, a couple $100 for me. The big moves today, thousands of dollars in the move today. I would not have got that if I were a day trader, right? Because I would have gone in, got out, moved on. I might have missed that move. So I find some of the biggest position moves do not happen as a day trader. They happen overnight. They happen in the overnight markets. Okay, so back to Brutus. And so I want to talk about Brutus and how we find these patterns with Brutus. And so I call this Brutus terminology. And Brutus terminology is a way of looking at all the points that our computer goes through and finds these potential opportunities. So what Brutus does is it goes back and scans. It scans years of data. And we're looking for a couple things. We're looking for an initiation point. What is the best place, the best time frame, all right, where Brutus is identified as we're heading into a trigger trade to buy before the surge? That's when the surge starts, the initiation point. When is the termination point? When do we got to get out of the trade, win, lose, or draw? That termination point is almost always right before an earnings report. The surge magnitude, what Brutus does is goes back and it scans, all right? It will scan again and again and again. It'll scan target and it'll see, does target have a pattern going up? Does target have a pattern going down? And more importantly, does target have a pattern of volatility surge coming into options? And what is that magnitude? What is that average expectation of volatility increase, all right? The only other things we like to Brutus to look for is ROI projections on the options and what does the historical accuracy look like as we're moving forward, okay? Now, what do we do with Brutus? Well, I will look at 3 types of trades and 3 trades only with Brutus because this is a buying strategy, option buying strategy. So my option trades look like this: buy calls, buy puts, or buy straddles. I buy calls if, again, one thing has to happen on all of these, and that is that options volatility, we have to see that surging. But if we also see price surging upwards, then we'll look at call option trades. If we see volatility going up and price going down into a trigger event, then we might elect to take a put option trade. And if we see option volatility surging, but we're seeing a lot of movement in the stock, but not directional, then we might put on a straddle. And a straddle is basically you're buying the call and the put together at the same strike price, using the same expiration date on the same asset. I find that a low risk or fixed risk way to profit, regardless of what direction the market ends up going. Sometimes the straddle will break one way or another, and we'll make more money on one option than we'll lose on the other. Okay, that happens. That will happen. Let's take a look at Rivian, for instance. So just last month, we had a Brutus signal on Rivian. We had a signal on Rivian a couple months ago to the downside, and we profited very handsomely on that down move. And if you look, we're seeing that target happening, but the down move is happening less and less. So Brutus signaled and said, hey, the one thing that does continue to happen is you see those big peaks on those red lines, Eric?
I do.
Those big peaks. That's option. That's the option premium. Surge, big surge to the left-hand side. Big surge to the right next to my head before it drops back down. Right? We want to get in front of that surge. And what we're noticing is that with a lot of the electric, the EV stocks, is that they just got hammered quarter after quarter. And now it's an area where Brutus is saying, I don't know how much we can get to the downside, but look at the volatility it comes in on these because everybody's interested in them. What about a straddle? And so what about a straddle was it? And so we looked at the Rivian straddle. Put the Rivian straddle up, Eric, so I can make sure I explain this to everybody. So we were buying the August 12th, 33 calls, and at the exact same time. In fact, it was actually on the exact same ticket. You buy to open the Rivian August 12th, 33 put. Okay. So what do you have here? You have a call and a put, same strike price, same expiration date, and we're paying that no more than 630. That's for the price of the call and the put combined. That was a day only order that ended up making 15%, over 15.5% in about 3 weeks. So we sat on this trade for 3 weeks, Eric, and the grass grew on Rivian, meaning the call and the put combined increased in value before the earnings report came out. Okay, it's important to know that, guys, before the earnings report came out. In fact, we're coming into August. So we're coming into that second half of the sweet spot. We're starting to see earnings come off now. There are not as many of them coming out. All right, we're going to see a lot of retailers. We're going to see the retailers, the Targets, the Pelotons, the Walmarts, the Dollar Trees. They're all going to announce. Now, are there Brutus trades on these? Maybe, maybe not. I'm going to show you the list that I'm looking at that have at least a 75% pattern of accuracy. All right. And I'm going to show you the calls and the puts. I'm not going to show you the straddles. I'll show you the call and put trades, that what we call that first pass. But here's the thing with the straddle, we put it on together. Sometimes we take it off together. Sometimes if the thing runs really hard in one direction, it might make sense just to take off the profitable leg and let the other ride as a lottery ticket. You never know. You never know. So, by the way, back half of August, Eric, we got 100% winners. Our closed positions, all of our campaigns, when we're going through and Brutus is picking these trades from open to close for August, all profitable.
I love that.
So,
you know who else loves that? All the members that are engaging and being part of your services, getting in on these. I'm sure they're pretty excited about it as well. It's good to hear.
Guys, and let me make something really clear. We're not 100% accurate. All right, we take losses. I don't know a trader. I don't know a professional trader out there that does not take losses. All right, I take them. I take them all the time. I take them as part of my strategy. My strategy says get out. I get out. Okay. So this one, and we're getting into the back half of this earnings season, looking really, really good. You might think 15.7%. That might not be a whole lot, but I can tell you it outdid what the Rivian traders, what the folks in Rivian have been dealing with for the year. We're on it in 3 weeks. We're in it for 3 weeks. We didn't care what direction was going in, and it handed us a nice double-digit return without market direction. This was one example of how Brutus is finding these best option trades, and I just set it up to show you exactly what we're talking about. We talk about Are we looking for the cheapest options out there? No, we're not. But we're also not looking for the most expensive. What we're looking for are options that are on the move. All of a sudden, everybody's jumping in for one reason or another. We want to already be in. We want to be in before the crowd. We want to be out before the crowd. So that's what we're doing, folks. All right. Now, as we turn the last 5 minutes of the program, I want to share with you what we're looking at with Brutus. And while this is not everything, definitely giving you the stocks here. I got a half a dozen of them here for you. And let's talk about these. So Salesforce has come up on the screen. Salesforce, and these are as of this morning. Yesterday's close was 188.18. We have a earnings date on this. This is happening next week, all right, the 24th. Now, Brutus has found a 75% pattern on this one, where we're seeing that IV change. See where it says average IV change? That's positive, all right? That means that we see a lot of people coming into Salesforce. Why? Because mainstream media can't get enough of talking about Salesforce before they actually come out with their numbers. And that pushes volatility up, that pushes option premiums up, and we're seeing that with even the theta goes up slightly. Now, what's the return on investment been like? 50%. I mean, you know what? I'd love to get a chance of getting a 50% trade before the event, before the earnings event comes out. Splunk, if you take a look at Splunk's $112 stock, also has earnings on the 24th, a 75% winner. And when I look all the way over to the right where it says average return on investment, that ROI percentage, average return, and this is including the losers. All right, these are not the average return on the winners. This is the average return all the way across, 64%. Affirm has a earnings date of 8/25. It has a 75% success rate, 87%. All right, 87% there for Affirm Holdings. Jinko Solar Holding, right? So Jinko came up. A lot of you probably don't even know what Jinko Solar Holding is. I'm sure after I said the word solar in Jinko Solar, you're like, yeah, I know what they do. Do you know they got an earnings report on the 25th of August? Do you know that 3 out of the last 4 trades have seen a 40 winners with an average return of 41%? Ambarella, $91 stock. Their earnings are coming out at the end of the month, 8/30, 75% accuracy, 42% average return on investment. And then I end with what I think is the best is last, Oracle. So let me tell you about Oracle. Now, Oracle's not coming out till September, so this one, these are all kind of in the headlights. It's the first pass. We want to dial in. We want Brutus to dial in and give us those best entry days, those best exit days. And oh yeah, by the way, are these bullish? Are these bearish? That's for you to find out. All right. Our members will know whether they're bullish or bearish. Our members will know which ones we decide to go after and which ones we decide to drop based on more advanced scanning that we do with Brutus. If you want these, you want to sign up for this, then what you're looking for is Operation Surge Strike, because that's exactly what we do here. We are playing the pre-earnings market. That's basically what we're doing. Oracle, by the way, 100%. We have a 100% pattern on Oracle right now that has returned on average 106%. So out of all 6 of these, Oracle's looking really good. And I can tell you, surge strikers in the room, you members, we're probably going to be looking at an Oracle trade if I were to pick one of all of these that you see here. All right. So, like I said, I'm showing everybody in the room what we're looking at. Go out and do some homework. Take a look at these patterns. See if anything makes sense to you. If you're an Operation Surge Strike, you're going to see what makes sense to us. And we make sure to send out the alerts to you for every single trade that we decide to do so you don't miss a thing. Eric, if you don't have the link up, pop that link up, pop the phone number in the screen as well if anyone has any questions on Brutus. Okay? So, as I am closing out today's session, let me just tell you what else we got going on. Those of you that are part of Operation Surge Strike, join us in about a half hour. Mr. Mastermind himself, Mike Wade, will be with us, and we will be talking about our recent close positions, our perfect close trades in August, what we have open, and what we see coming down the pike as far as new surge strikes. Otherwise, everybody else, I'll be back here again, same time tomorrow, and we'll see you then. Bye now.
Again. This Thursday during Midday Momentum, we're going to be talking about what Garrett is calling the biggest short of his career. You cannot afford to miss this event. Garrett is going to be setting up this trade and explaining why he thinks this trade will be one of the most beneficial trades you will ever see during your entire life. You have got to get in on this thing. Go ahead and click here on the screen to get this thing added to your calendar. We will see you this Thursday during Midday Momentum. Go ahead, click here. We'll see you soon. Hey, let's go ahead and bring Garrett in 5, 4, 3, 2.
Hey everybody, hope you're having a good day. It's 12:23 and interesting little market. Again, we just continue to bleed higher with the SPYs. Again, that pathway to 430 that I've been talking about for the last week and a half since we hit 420, still there. So again, we're just going to continue to just wait this process out. It continues to gear up for the possibility of something significant to the downside. Let's talk about what's on tap real quick, Brandon. So I'm introducing my child to the Laugh Olympics. It's extraordinarily underrated. We're going to talk about momentum. We're going to talk about what Michael Burry just did. We'll talk about Bed Bath & Beyond, which has just absolutely been bonkers today. We'll talk highs and lows and our hot long shot. But it is August 16th. So, Brandon, what happened?
Bill Gates, man. Bill Gates is the man. Obviously, you've heard of him. He sent out a letter to his employees back in 1987 on this day, congratulating them for all their hard work because they realized that this day their cells, their software had finally passed a small company called Lotus Software. Anyway, never looked back. Obviously, as you know, Microsoft did fairly well after that, made a few more dollars and continued to sell a few more copies of their software. So doing really good job. Thanks, Bill.
Yeah.
Thanks, Bill.
Yeah. No, thanks, Bill, because I wish that your company had not been as successful. Stock's up 200,000% since it effectively went public. This guy has nothing to do anymore, so now he just flies around on a private jet and lectures everybody about climate change. I wrote something about him over the weekend, effectively like, stop. Just stop. Stop telling me to eat bugs. Stop telling me that my carbon footprint is the problem. You own a jet. No, he doesn't just own one jet. He teamed up with BlackRock and bought a jet production company. So I don't want to hear any more of this nonsense. It's not about conspiracy theory. It's just, I don't care. I've got things to do. Leave me alone down here on my little coconut island. This was the day in 1873, Brandon. Baltimore Canaries. Do you know who the Baltimore Canaries were?
Oh yeah, they were the motherbirds of the Orioles.
That's one way to put it. They were the second baseball team in Baltimore. There was the Lord Baltimores, and then there were the Baltimore Canaries. Now, one of the big problems, unfortunately, is that not a lot of people liked to watch baseball back then. There's a lot of people who still don't like to do that now. But Baltimore had something called Newington Park. So they had their outfielder with the most 19th century name possible, Lip Pike. He raced a horse at the park. He was given a 75-yard advance on the horse. How many seconds did it take for him to win this race, Brandon?
Wait, how far was the race again? How far? How far?
Oh, I have no idea. All I know is he was given 75 yards.
Oh, 75 yards. 6 seconds.
10. He won the race. He beat a horse. Hey, great. All right. Momentum is positive today. And again, not much really happening that would otherwise suggest there's 430. Called it last week. Said last week. Now we're in overbought conditions. And now we have effectively the strongest momentum scenario that we have seen since last November. And in this environment, MFI is now stretched. The MACD is now hitting near max. The MFI is just continuing to rise. The ADX, we haven't seen this high since last November. So yes, we are very stretched out. And that's very important to think about because the Federal Reserve is going to speak tomorrow. Not speak, just, you're going to get the Fed's minutes, right? So you have to go back and you have to really understand what this event has been. So this year, Fed has released minutes multiple times. And the first meeting, the first time that they released it, was February 16th. So here is the year to date, February 16th. Ooh, that coincided with part of a sell-off that was transpiring right around the second big expiration date of the year. 443, we finished down at 415, but then March rolled around and we had that big move right after Powell spoke. The Fed released minutes on April 6th and momentum went negative and it was a big drop down. The Fed also released minutes on May 25th, which happened to coincide with a positive switch in momentum in this market, and we had a short-term run. The Fed also released minutes on July 6th. Positive event helped propel this market where we are. So what is the market going to do tomorrow? I don't know. But I will say that you should be trading with Kenny and I tomorrow because this has been a period where the market makes a decision. And investors are going to be looking for clues into the rate hike expectations for September tomorrow. We will be here tomorrow at 1:30. We're going to go until about 2:30. And we're going to look for direction in this market. We're going to break down changes in the language in the minutes. And again, look at the run that we have had. This is the most pronounced run that we have had of the year. This has been a very hated rally, and it's fascinating to watch because you have this massive squeeze. Last time momentum went positive, we were on the 19th. I was in channel 381 up to 430 today. 50 points on the SPY in about a month. Now, can it reverse? Yeah. Can it move higher? Well, it's likely going to consolidate around 430 heading into tomorrow. And at that point, if the markets like what it hears about rate hikes, expectations, this momentum can continue. And the next move up is this 442 level that we saw back around the 18th through the 20th of April earlier this year. There was no significant, in any capacity, anything holding this market back from going to 420 to 430. So now you have to look up and say, okay, what is the next level? Well, the next level is that 442 level, and then possibly even higher up to that 460 level. And I know that sounds insane, but take a step back and look at Michael Burry, right? So Christian Bale played Michael Burry in The Big Short. Big Short was a phenomenal book that was written by Michael Lewis. And the book examines a number of different money managers from effectively 2005 through 2008 who believed that there was something fundamentally wrong with the U.S. economy. Now, there were other people who made calls. Peter Schiff was on air in 2006, 2007 on CNBC saying that he expected a financial crisis to hit the housing market, and they legitimately laughed at him on air. That was effectively viewed and kind of satirized through when Burry in the movie The Big Short and in the book goes into Goldman Sachs and says, I want to buy a bunch of security on the housing market. Well, they laugh. And later, people are out buying champagne because they think they have just sold a person a ton of insurance on something that doesn't go down. Well, ultimately, Burry wins. It takes a while for him to be right. And it takes a while for him to be right because a lot of banks refuse to change the valuations of their books to reflect the fact that there was a serious crisis. And what transpired as a result of that was a dramatic move down in the markets. And it's worth highlighting this. Now, right now, if you look out into this market, there is not a lot of positive data. And I've talked about it quite often. We've moved into this territory where bad news has become good news. Well, Burry has done it again in the second quarter, according to his SEC F13 filing. And what is that? Big fund managers are required to quarterly file 13 Fs. These are filings that tell you what their big positions were. What did they buy? What did they sell? And you can't really get a true sense of why Warren Buffett is buying a lot of Activision. Maybe he views it as this, value asset at a time that Microsoft's taking it over. But why is a guy like Michael Burry, who is famous for 2008, he is a perma bear, and he's a guy who's been fairly right about broad macroeconomics for a while. He sold every single one of his stocks except for one. And the one that he held was Geo Group, which is a private prison company. It is a company that contracts with the U.S. government. It contracts with states to effectively handle overflow of prison populations. It works on the border here in the United States, and it has facilities all around the globe. But that's the one thing that he held. That's an amazing thing to hold on to. Why is that? Well, maybe there's going to be a refugee crisis due to food problems in Europe. There could be any number of reasons. But he sold everything else, and that's the big, big question. So we look at this and we say, all right, what is the state of this economy? And Burry will likely agree with a lot of this, right? He has concerns about consumer credit. I've talked about this, right? Big concerns about consumer credit. Americans adding $40 billion in consumer credit in June. That's the second highest on record, only to be second to March of 2022. 47 billion on record, right? And we've seen more credit card openings than we've seen ever, right? More credit card accounts are opening right now. But we thought that the American consumer was strong on cash. Well, nope. Their savings levels are falling. Real wages are behind inflation. And more people are putting things on the credit card in order to maintain their standard of living. Okay, cool. We know that. Well, what's next? Go through the line here. More than half of student loan borrowers' balances are not declining. People aren't paying off their student loans. That's a consumer credit issue. People are over-leveraged on their households. They were taking out debt last year to make payments and improvements. And now, because they thought that all of these, that lumber and all these other things were going to keep going up in price, they took out $200,000 on a $500,000 home, bought all of this stuff, and now the labor costs are going down, the lumber costs are going down. Oh, and now their housing price is going down. Business conditions, they're very weak right now. I just talked about the Empire State Manufacturing Index. Now, nobody talks about this. Nobody cares about this, right? This is a New York Fed report. Well, they missed expectations. People were expecting a move of 5%, 5-point move, right? Last month. It fell from 10 to negative 31.3. That's the lowest drop since 2020 and 2009. We're seeing big new order shipments drop. We're seeing durable goods things drop as well. And as I explained, when it comes to economics, there's a very good argument that cyclicals, durable goods, housing, which are only 15% of GDP, that is what is truly responsible for a recession or an expansion in an economy. Housing, some home builders are saying, is that we are in a housing recession. Well, durable goods numbers are looking worse and worse. And the NAHB Housing Index said that their expectations are worse than they were. It is now poor. The index just dropped. It has fallen for 8 consecutive months, and it's unlikely that it's going to bounce back soon. The markets are clearly overpriced. Again, we look back at price to earnings ratios, look at the number of unprofitable companies that are trading in this market, and you have a bearish case. All of these things are important. The fact that you have a multiple, the average PE multiple of 22, that's still higher than the mean historically. You look at the fact that earnings expectations are not falling the way that they possibly should and that they don't possibly reflect previous data. That's critical moving forward. The Buffett indicator, which we talked about, that's elevated. All of these things are leading Burry to create this macroeconomic view that this is just a short-term bear rally. Now, we talked about this yesterday. We had a chart on yesterday, and we showed that the average bear market rally going back to post 1945 was about 13%. Post 1920, it's about 18%. So take the average in there, or maybe even look at 2009 or the dot-com bubble, and it did go up to 22%, as he mentioned in his tweet that he sent out last week about market silliness returning. Now, does that mean that tomorrow this market is going to roll over? No, it doesn't. Does it mean that it's going to happen by September 2nd? No, it doesn't. Does it mean that it's going to happen by September 16th when we have quad witching? No, it doesn't. Does it mean that it's going to happen this year? No, it doesn't. This thing can go. These rallies can continue, and the market can be irrational because the market is not the economy and the economy is not the market. And you know that the market has upward bias, and we have had an outrageous amount of capital put into this market thanks to the Federal Reserve's balance sheet. Go back to 2002, the Fed's balance sheet's just a few $100 billion. It's $1 trillion in 2010. It's $9 trillion up here. There is a direct correlation between this, and the Fed has been very slow to increase the sales of its balance sheet. There are a lot of other factors that people are saying, hey, you know what? Maybe the Fed isn't going to raise rates. Maybe inflation is unchecked. Maybe inflation is muted for the next 6 months and we see these drops. But inflation, like it did in the 1970s, can return 12 months, 24 months, 2 years from now and create conditions that are much, much worse than what we're even seeing today. That doesn't mean that it is happening now. It doesn't mean today. Momentum remains positive. So we keep focusing only on this number. That's it. The weight of the acceleration in volume and price versus the deceleration of volume and price. And we bring it down to one simple metric. And yes, we missed June 17th up to July 19th. Very low volume rally, a lot of choppiness. But look at what happened the day that we called it. This thing has just taken off. Go back to March 16th. Same thing. Huge move. Big move back in February. Big move back in May. I am not going to try to short anything right now. Let other people do that. I am going to wait until the number and the data says it's time to go. And when will that be? Well, it could be very soon. There's a great chart. Thank you, Scott. This is 2008, 2007, 2008 compared to 2021 and 2025. And you're looking at 200-day moving average. And we're getting up there. We're getting very close on the S&P 500. And we're getting into those September and October months. And there is a lot of potential negative events possible. But do you really care if you try to short it today versus you try to short it maybe 2 weeks from now? Because if you try to short this today and it just keeps going, you're bleeding cash. Just wait. Even if the signal comes here or down here in this gray line, you've got a lot of downside here. And again, the downside here is 3,600, 3,400, maybe even 3. But wait, don't force anything. Wait for the signal. The signal will come to us and we will profit from it. Now, the other big news today is Bed Bath & Beyond. Huge squeeze. Huge squeeze. And these things can be unpredictable. But what's important about it is that just a little bit of positive news creates these conditions. Imagine being the CEO of this company and you bought tons of stock at $4 and you can't let it go yet because you got to wait. But these violent moves, these are the things that you want to be doing with Kenny. Now, I'm looking for breakout conditions on other stocks that have high short interest. Bed Bath & Beyond has very high short interest. And if momentum flips over on BBBY, the higher these stocks go, the better. I hope this goes to 50 because at that point, I'm going to try to short it back down to 10 because that's the type of downside that this company has. This company has bankruptcy downside. In the event momentum goes negative, the Fed has to raise interest rates, and we see retail problems continue to abound. But today is not the day to short this. You've got to be patient. You've got to wait for the signals. And again, I'm content if this hits 430. If it breaks resistance at 430, seriously, I'm buying the 442 SPY for September 2nd because that's the next potential level that this can go. And it is insanity. And you have to be somewhat humble about this. Market timing is extraordinarily different. This is the best tool that I've ever seen to do that. And to have conviction and to say, okay, I don't need to make an outrageous move today. I can wait this process out. And in this low volume environment, and I mean, it's 56% relative volume. This can and will continue into Labor Day until it stops. So don't ask questions like, when do you think it's going to roll over? I don't know. And nobody knows. But it's going to happen. Now, will it happen at 447 or 430? Will it happen once it gets to the 200-day moving average, or will it go all the way up to 460? That doesn't matter. React to this market. And that is what our primary focus is. And just guessing that tomorrow that the Federal Reserve is going to blow up this market doesn't do anything for you. The better move is to wait. And if we get a one-directional move on this market post the Fed minutes, we follow that. We trade with momentum. Kenny and I will be there tomorrow to do that. And then on Thursday, we are going to break down, really fully break down how and when to trade the rollover in this market. Now, it may come this week. It may come next week. It may come September 2nd. But we are going to be prepared for this. And I have a list of stocks that I'm going to talk about. I have a list of companies that I just love the fact that they keep getting more expensive. Because when the time comes, and again, the time will come. It's happened 4 times this year. It happened multiple times last year. It happened 3 times in a month in 2020. We may only get one more of these big opportunities this year, and I can't wait for it because I think it's going to be very similar to what we saw back in 2007, 2008. A dramatic rollover, and it will not take a significant amount of selling to cause this level of cascading. I am still very bearish on the economy. I think we are technically in a recession based on the first quarter, but I think the Q3 numbers are going to be really bad. I think that's going to be a reaction in this market. The Fed has to start increasing its balance sheet reductions. It said that it's going to do that. The longer it doesn't, the worse it could possibly be. And I'm telling you, it's these September and October months of volatility. Keep going higher, hit that 200-day, and then we're going to look for all the big names. It's time to make money on it. We've got low volatility right now. Even that is what I'm focusing on right now. It is cheap to keep running with low volatility into next Friday. The 850 put for the VIX, UVXY, which is the leveraged ETF on the volatility index. The 850 puts about 35 cents. And if we get past tomorrow with little selling, that can run even lower. And that is setting us up for a very interesting condition where you have the volatility index possibly going to 18. That all clear signal is extremely concerning because it's going to be a really good opportunity to start loading up on cheap insurance in this market. And if this rolls over September, October, even into December, December is also very interesting. You can see a very pronounced shift in this market. And we're going to have, it's going to be a 3-day period. It's going to take 3 days for us to really know that this is it. We are not going to have a 1987 style crash. That is not a thing that can transpire given the different types of halts and limits that exist. It will be a series of days, and you will see live on air how momentum shifts and how we should trade it. All right. So the UVXY, when will it reverse split? I think it does that down around 5. Down around 5. SV2, what did you get exactly? You're talking to SVT. SPY buy September 2. Well, that would be the 442, and that would be the call, but that is only if we get that. Look, we are right now sitting at the SPY. We are right at the tip of 430, and we hit it. We bounced around. I'm expecting just to see consolidation here, where this is probably going to trade between a range of 429 and 431 heading into the event tomorrow. The event tomorrow is the Fed minutes release. And if the Fed minutes do not fuel concerns and worry about that 75 basis point hike come September, then very, very quickly, you can see it break past this level of resistance. And at that point, the next level is up around here. 442 up to 447. But again, I'm not buying that today. I'm not trying to front run anybody. I'm not trying to recommend that. I'm not doing that until we get on the other side of this. So if you make that decision to buy it and it goes the other way because the market overreacts to the Fed minutes, don't come back and say, but you talked about this. I'm telling you my game plan. That is the next level. That is where this can go. It has to get through resistance right now. It has to get past its 200-day moving average. And if it doesn't, other way. Other way. All right. I mean, I bought some Bitcoin yesterday. Typically, that's a top. Bought just a little bit. I had some extra money. I was like, I'll just buy it for my daughter for 20 years. And it's fallen. So typically, anytime I do that, that's a contrarian indicator. Maybe we get it. Maybe I'll force it that way. All right. Don't you think oil draining reserves lowering price at the pump is a temporary effort to prevent a bigger drop in the market? No, I think it's an effort to win an election. It's a different. I'm not touching USO. It's a broken product. Irrational exuberance, yes, and read the book by Schiller and read anything that is called irrational exuberance. That is where we are right now. That is where we are right now, and it defines logic a little bit. Now is not the time to try to short. Wait, we will call it down to the day. We've done it 4 times this year. I got to jump over to World's Biggest Trade, where we are taking advantage of the short squeeze on Bed Bath & Beyond with some other retail companies like Wolf. Look at that run. It's our trade of the day. Like Wolf and some of these other companies that have high short interest that are being targeted right now by the Reddit army. We're going to talk about Petco right now. Everybody else, I'll talk to you tomorrow, Monday Morning Live, 8:30. And I will see you on Thursday to talk about the upcoming big short that we are going to engage in. Have a great day.
And we are going live with Garrett Baldwin, the world's biggest trade in 5, 4, 3, 2.
Everybody, hope you're having a good day. It's 1 o'clock. And again, being a little protective in this market, the ARC trade just went sideways. And we had this print this morning. Scott was in the room. He's like, oh, man, this is going to be great. 53 print. And boom, dead. Just rolled over. And that's the challenge of this market. We have this scenario here, right? You're looking for some momentum. You're looking for things to continue. And we are overbought. Like no doubt. We are overbought. We have 90% of stocks over their 50-day moving average. That's traditionally bullish. But this choppiness, right? 53 here, bumps up, moves up. It just broke down today. It just broke down today. So set a 30% trailing stop. That's exactly where we ended up. The spread was $1. We got out at 69 cents, part of the recommendation, and then rolled over and said, okay, well, you're seeing Bed Bath & Beyond rally, and what a rally that is. There's a VWAP move this morning, and this is something that I'm sure that Kenny and everybody else is celebrating because this is silly, right? This is a short squeeze. So the Reddit crowd has gone after Bed Bath & Beyond. This has been halted already today. It got halted up at 28. But what's the fundamental reason why this stock is moving the way that it is? And the answer to that is short interest. This is the highest level of short interest in any industry. 47% short interest. So when you get buying and you have this new meme crowd that's stepping in and they're buying and they're snapping this stuff up and you have these positive numbers this morning from Walmart, you compare the sector accordingly. Bed Bath & Beyond is being squeezed. Now, it's obviously too late in the day to get in on this, but what are other companies in the retail space, specialty, non-apparel? Well, you got BBIG. Not BBIG, forgive me. Big, just BIG. So BIG, huge squeeze this morning. Big lots, right? This is a company that we traded before, and this is a company that bottoms out in the $18 range. Big lots. And that's squeezing today, right? Huge squeeze here today. What else is there? Well, you got Big 5 sporting goods. BGFV. Big move today. So these stocks move in tandem. Now, one of the things that we're looking at, pay attention to these companies. Carvana, look at the Wayfair. Wayfair's likely rocking today again, too. Haven't even had a chance to look at it. Wayfair, big move. Again, all of this stuff is interlinked. Well, what did we touch? I'm not going to get as broadly speculative on this. I'm looking for these types of breakouts, but there's some other companies out there that just get left for dead. And this is one of them. This is Petco. And again, even in a recession, people will do everything they can to keep their pets fed. MACD positive earlier in the month. We just moved positive on the RSI. MFI has shown conviction. And the ADX, big move here. That's when we moved above the 200-day. It tested its 200-day over the last 2 days, and now it's springing higher. High short interest on Petco, 27%. Very cheap, interesting company. And again, all I'm looking for here, and this little breakout is for this to get to 18 or 19, and then we're done. We've made back what we lost on the ARC trade, and we're still in this environment where I'm just watching to see what else can come out of this rally. This is a massive, irrational rally, fueled heavily by low volume. Just people coming in, buying a couple of shares. You go to sleep in June, the market is at the worst possible situation that it could be. Institutions are just saying blood in the streets and just a little bit of volume buying, a little bit of volume buying. We got the momentum switch back on July 19th. And what's important about this is you don't know how long this rally is going to last. You don't know. It's impossible to predict. But again, here we are. Here's 430. And now the question is it going to break through this level? And where does it go from there? And the next level is 442 to 443. So our long shot trade around the SPY last week, that paid. That's up 125%. And the key thing here moving forward is trying to guess when this is going to roll over is a waste of our time. And what it is likely to occur is we'll likely see something very similar to this April or this June sell-off where there's some chop. There's a 413 down to 408. It moves back up. It moves back down. And what is happening while this is transpiring, because this is the matter of how the markets have worked, you got to move up. You see selling. That's profit taking. You get some low volume buying, but the selling really accelerates. And you start to see way more selling than you are seeing buying. And in this environment, there's no selling. Selling is zero right now, which is staggering. There's no selling. Now, the buying has slowed down a little bit today, down in the small cap space. The buying remains the exact same it was yesterday. Low volume, slow burn higher. So the only thing you can do in this environment, again, you have to be patient. You have to be very patient right now because there's no real reason to take massive risks. The time to take risks are when you get this. Now we're just trying to follow this out. This is people buying for $1, trying to sell for $1.20. Buying for $1.20, trying to sell for $1.25. It is a low volume environment. You have algorithms that are still going crazy. You've got these crazy squeezes that are transpiring. We're just looking for a continued move higher on some of these squeeze stocks. I think that Wolf is going to get to 1720 by the end of the day. It's just been this nice move higher pretty much the whole day. But no real reason to take any serious risks. You've got a big event tomorrow, the Fed minutes. That's been a very important day for the year. And buy Wolf, sell Chewy. Do whatever you want, Mark. So that's where we sit right now. Just with Wolf. We were in that earlier today. You could sell Chewy, but I don't see the reason to short anything right now. I really don't. Until you get the confirmation. I've just got everybody in my room today. Everybody's waiting to see when momentum switches. That's what this is all about. That's what it's all about. Plus, we're going to talk about how Josh is going to come in last place in our fantasy football league. That's going to be a whole thing. That'll be fun, right? All right. So our portfolio is bare bones right now, and that is on purpose, right? So Wolf, we're already up 21.5% since we bought into it this morning. That was at right around here, 1660. So again, this gets up there, and we went all the way out to September. That was the other thing. We went out pretty far on this, but that was the most liquid chain that we could find. So might not be a massive move here, as what we could have done if we would have done, say, hey, Friday. We bought a little bit of time, and we're going to see how this market reacts. We're going to get, hopefully, we get up to 17.20. We get up to around the 80 that we bought it for. We get to $1.20 today. What we then turn around and do, we set a stop at $1. Because tomorrow, the markets are going to probably be, well, we're going to wake up. It's probably not going to be any major macro news overnight that's going to fuel a 200-point move one way or the other heading into tomorrow. Everything will calm down in the last 45 minutes before the 2 o'clock hour. And then we're going to get active, and we're going to see institutions react first 45 minutes, and then we're going to see the last hour. That's where the retail will either follow this market back in or they're going to dump. What do I think they're going to do? I don't know. I could take either side of this, right? I can take Fed minutes and people saying, okay, well, they're only going to go to 50 basis points. Now, I am of the belief that the Fed should go to 75, and I think that the Fed has done plenty to signal to the markets that 75 is the number. But since I have said, going all the way back to the beginning of this month, there is no major catalyst that would stop this market from going from 415 up to 430. And possibly tomorrow, your next move, you break resistance at that 4,300 level, it's 44.20. And that can be as quick and aggressive as it has been in the last week. And it wouldn't surprise me to see it move like that, possibly to 435, 436 by the end of the day tomorrow. That's the SPY. But if this rolls over, if you get a scenario where people freak out because, they actually believe the Fed is going to go to 75, well, go back to, that's February. Let's go back to April 6th. Here's the 4th. Here's where my concerns started to really pick up around the 5th. Here is the 6th. And the 6th, big move down in the market. Big move down. Fed meeting pushes up 2 o'clock hour, dropped to 442, pushed up to 446. Sell-off ensues the next day, squeezes up to 448, and then the sell-off really started to pick up over the next week, 3 weeks, right? Because we got all the way down here to May 24th. We have had some days this year where the Fed meeting has done nothing but positive things. Fed minutes. Good example of that was July. June meeting minutes, very positive. And then the negative side, you go back to February 12th, February 9th, in that area, 9th or the 16th, and big sell-off. 16th, I believe, 440 down to 419, ultimately ending at 413. So again, the markets are going to, I know that it's not a Fed meeting, but it's Fed minutes, and the markets will look for changes in language and what it means moving forward. But I think this market is more interested in the jobs report, September 2nd, the CPI number, right around the 14th of September. The 16th of September is quad witching. And then 4 days later, that's when the Fed meets. That's September 20th. Trying to turn around and say, I'm going to buy the SPXU for tomorrow. If you want to gamble, gamble. You want to buy the SPY and set it at 425 or 435 for tomorrow, do it. Whatever. The reality is, though, that we have seen when we trade these things live, you get Kenny and me together, you get Kenny and 8Baller together, you get 8Baller and me together, and we react to it and we see it live. We know that we can wait for the news, wait for the reaction, follow the trend, buy the calls expiring tomorrow at the end of the day at 2:30, aim to stay in the money one directionally, one way or the other, and trade those last 90 minutes. That's it. That's simple. All right. What do I want to bet? What's the bet? Can this market roll over? Can this market turn around and collapse? Well, if you're saying it's too close to an election, let's go back to 2008. Right there. I mean, this is astounding to look at. And this has been my argument. Again, September, October. Economic data, Q3 data comes in lower than expectations. The inflation number ends up above 8.5. It's not going to take much. Here's your 200-day moving average. This market rolled over in May of 2008 after a big rally from March to May. That was post-bear. It'll be fine. Bear Stearns blew up, but, economy's still strong. Okay. That didn't work out. And then the other thing that we have to pay attention to, in the broad market, if everybody is so convinced that everything is going to be fine moving forward, what are the insiders doing right now? Insider buy to sell ratio. And we'll look at the last 6 months, and we'll go dollar for dollar. August 11th was pretty much the lowest that we've been for the year. Really low in July. The peak here for all the insider buying was 4 days before the positive momentum switch. And then, one thing I will point out, this previous low right here, June 8th, and around March 31st, those were negative momentum events that followed 2 to 3 days later. So we haven't gotten it yet, but we're getting clues that executives don't want their own stock right now. They're selling their stocks, and we're seeing it come in. And then here is August 10th. That's the low for insider selling to buying. There's been a little bit of buying the last couple of days, but these are ominous signs. I don't have to do anything. Just watch the SPY continue to squeeze higher. 430, 30. We had this happen back here, right? We had this big move that really no one could explain. Do you really believe that the markets rallied on March 16th until March 31st because Jerome Powell said we're not going to have a recession? There was a squeeze. This was also low volume. This is very low volume, by the way, this whole move higher, all the way going back to June 17th. We have no selling right now. We have no selling. There's no selling pressure. You want evidence of that, just go to FinViz. You can just do this for free. Just sit around and stare at the numbers. Technicals, performance, week, down 10%. 365 stocks are down 10% for the week. How many are up 10? 703. That's a 2-to-1 ratio. Takes a lot of money. Takes a lot of money to move a lot of stocks up 10%. And 350, a 2-to-1 ratio, that's sizable. Today, up 5, 298, 289. Today, down 5. 329, that's interesting. So we're effectively muted today on buying and selling. Month up 30%. That's what I want. 877 stocks are up 30% or more in a month. 85 down 30% in a month. And you've got right now, of all assets, ETFs and stocks, 80% are above their 50-day. And there was a number yesterday. Somebody told me that 90% of stocks are over their 50-day. That's probably not that level, but probably around there. That's significant because there's no technical reason for a lot of people to dump. A lot of people are following the 50-day. And you'll probably see a lot of people not dump stocks until it gets under their 50-day because that's what they know. And a lot of algo is built around the 50 as well. So it's that 200-day moving average that we're paying attention to. You get 66% of stocks under their 50-day or under their 200. Will tomorrow be in the big room or here? Tomorrow we will do our 30 minutes. We'll have our private prep. And then we're going to do 1:30 to 2:30 with Kenny and I as well. Our portfolio is 5 stocks. I got out of energy, and I am very well aware of the cruel irony that transpired. Sold CRGY yesterday. Again, I wanted to get out of the energy sector. I wanted to be clear of this. 4 executives bought roughly 1.3 million in shares. It's the first insider buys ever for the stock. And it's the first insider buy since they went public. Now, this is stretched, and I do want to revisit the stock. But again, it's good to see that insider buying is transpiring up around the 1640, 1650 level is where the purchases were. So again, the thesis for this company long-term is there. Retirement account, yep, I've got some shares in it. But if I'm actively trading it and I wanted to be out of the XLE and the rest of the energy sector for the time being, CRGY. Now, I'm going to look for this to move back lower. I'm expecting that if the markets move lower, virtually all sectors will go with it. And this kind of rising tide, it moved up 3.2%. It was up 6% at one point. It has pulled back a little bit. And one other thing, keep in mind, we've dug through all of the numbers on this stock. This is not going to be a company that you care about its earnings reports on a regular basis. The stock is going to go to 18. It is going to fall to 10. It is going to go to 20. It will fall to 15. It might even hit 5 one day. But over the long term, 48 months, 60 months, this is one of the inflation protection stocks that I like. This is a long-term buy and hold. If you have the stomach for it, do that. But understand it is going to be volatile in the process. Boise Cascade's up 5%. Annalee Capital's up 17.4%. Northwest Bank shares now moving up to 10.3%. Sportsman's Warehouse has squeezed a little bit today as well. SPWH. Big 6.5% move today. And if this continues to move higher and we get toward our purchase price of 12, if we can get up to around 11.50 on this, we're selling calls on it, particularly if it gets into the RSI around 70 and the MFI up near 80. I really am hoping somebody just comes in and buys this company out. That was what Cabela's was supposed to do at $17. The deal was called off. A lot of insider buying on this stock. That's a longer term position. We'll hold it so long as momentum is positive. TFS Financial is now up at 1568. And Wolf is our new member, WOF, Petco. Everybody's going to keep them dogs fed. Wolf, like Bed Bath & Beyond. Look, we're going to watch it. If it breaks down in any capacity, we will move out of it. But I mean, just solid momentum today. Looking for it to break above the 17 level. We bought the 1750 call for September 16th for 80 cents earlier today. Let's see where that is right now. I'm going to be jumping in 7 minutes, doing 30 minutes now. Don't talk too much. 81-cent move on this today. We've got other retail numbers coming out. Keep that in mind. The 1750 is now at $1. Got a spread of 95 on 110 today. So it gets to 120. That's your 50% line. That's where you're looking to take some gains. You might even put that in right now as your ask in the event that it gets to that level. And we're just going to continue to look to follow the momentum. Stop on this is 50 cents. My dogs did recommend Wolf this morning. Questions? 124. And just so that everybody knows, just, people who are members of the world's biggest trade, we're going to be doing that event on Thursday. I'm going to break down, a lot of the stuff that we've talked about before and talk about our watch list, but I'm not going to show them how to trade it. That is reserved for what we do. We are looking for that exact moment. You're going to have a list of stocks. You're going to have a list of targets. You're going to have a list of dates that we will target specific stocks for the downside. There are going to be moves in this market where a company like ChargePoint, remember I said ChargePoint was likely heading back to 20. It looks like it's going to get there. But let's go back to April, right? That is what is very similar today to where we sit. 2050, and then look at the move in 2.5 weeks, 3.5 weeks. We stopped out on that trade on the 18th, But I had gone all the way out to June on that put. We're going to focus on 2 weeks from now. 2 weeks from now, a specific put. So in 2 weeks, this went from $20 to $15. These are the types of moves that we can anticipate. 16 here down to 11.50. These are 25% sell-offs. These are algos dropping everything. Here's June 8th. 16.50 to 12. Just gear up and wait. Just wait and wait and wait. And when the time comes, that's where we will pounce. And then what we will do is we will hope that we get another one of these. Because we get another one of those blood in the streets scenarios, and we get another low volume squeeze. We're buying way out of the money calls. 2-3 weeks out. 15 on CHBT. Well, here you go, right? July 16th. The stock's gone from $11.80 to $19. And it's still unprofitable. That's the best part. This is the difference between trading and investing. Mark must be in the room. People are thanking Mark. 127. I got 3 minutes if you have any questions today. Set stops on Wolf. Be protective. Get to 120 by tomorrow. We'll likely take some gains. Just because tomorrow is a risk event. The Fed minutes is a risk event. But again, my expectations are, I think we're going to get to the end of this month. Still not a lot of negative catalysts in this environment. And people are going to look back at this whole summer and say, how did I miss it? They missed it because they didn't trade momentum. People were asking about banks, XLF. Banks continue to run. SLU continues to run. And the IYR continues to run. That's the real estate. And the reality is, those are going to be the first things to go around inflation. You got an itch to buy Carvana puts. Well, bad news, right? Carvana's, I'd look at buying Carvana calls. Down is up right now. And remember, this thing, 19 up to 55. Let's go back to April 18th. Remember, I said, let's see a scenario. Couple of things, right? High short interest. And wait until you see where Carvana is. It's right here. 28% short. It's right around where we are on Petco. These things are heavily shorted by large institutions. And keep in mind, the bets that institutional investors are making right now continue to compound. They keep doubling down. So Carvana, remember I said about the SPY real quick, right? Conditions are different. Year to date, you get through 430. This is your next peak here. We've done it twice this year. February 15th and April 19th. 443. Now look at Carvana. Year to date, February 18th, right here, 137. I'm just looking at here, which is April 22nd. That was a negative momentum environment. This was a short-term positive momentum move. We saw in the market a little bit of a squeeze, 102. Do I think Carvana can go to 102? No, but I think it can go to 80. That's what this is right now. It's not supposed to make sense. CVNA, like this is the type of long shot things that we talk about. You get past tomorrow and you go out to September 2nd and you see 2 to 3 more moves where you get an 8% move in the next 2 to 3 weeks. September 2nd, because that's the jobs report. That's the next big catalyst. The 80 is like 60 cents. Volatility is really up in these calls. Fridays, you're getting a lot. This has got to be spread selling, but you're getting some speculation today on the 70s for Friday for 30 cents. Speculation on the 60, 5,600 contracts sold today on the 60 for Carvana. So I would be patient, because if we go back and we look at this year, right here is April 5th. This is a negative momentum move on the 6th. If you try to short it here, this is what happened with us in ChargePoint. If we would have tried to short ChargePoint, similar to if we would have done this with Carvana, we would have gotten stopped out because this moved higher into those last couple of days, those overbought conditions. And then we ended up shorting right back where we wanted to short. It's going to look like this. It's going to look, there's going to be days of choppiness where this is selling, and then there's a little bit of volume to buy it. Not a lot of buying, but just a little bit. The next thing that happens is selling accelerates. You have funds dumping positions, and then you get a little bit of buying, and then those funds have turned right back around and used it to aggressively sell. And then by that point, the momentum, which is measured, many different ways that you can do it, but the way that we do it, which is based heavily on RSI, MFI, MECD. This is overbought. Look at that. Big candle up here. Just because it's overbought doesn't mean that tomorrow is going to be the day that it just stops. This can go on for a while. So it depends on, I don't know how long the days to cover is, Carvana. It's only 3. That's interesting. All right. You're speculating, Stock Sisters, but that's okay. What say you, MS? Are you asking about Morgan Stanley? And I do have to jump. I have to jump in 2 minutes. Very important. Momentum overbought. This would be something that we would turn around and try to short when momentum goes negative down to its 60-day or its 50-day. Momentum negative move here. This is choppy, but investment banks, they'll probably have good earnings reports. TCN again. Bad luck with this last time. Overbought. We're going to wait, and we're going to probably ride this again lower. Something happened with them, and I have to go back and look at the data. Good fundamentals, though. All right. Good deal on the Carvana calls. All right, it's 1:34. I got to go. Brandon's got to go take his muscle milk, and I have to go take my daughter to the doctor. So everybody have a great day. Set a stop on Wolf, and we'll continue this tomorrow. We're going to be trading here live, 1 to 1:30. We're going to talk about trading tomorrow from 1:30 to 2:30, and how to trade this directionally at the end of the day. I'll talk to you all tomorrow. Have a great day. Great being with you as always. See you tomorrow, Monday Morning Live, 8:30. Take care.